welcome each one of you to this two-day virtual international tax conference scheduled for today and tomorrow, same time. This international tax conference is our flagship event of the BCIC calendar. Before we could start, I would request the BCAC request all the members to follow adequate precaution and strictly adhere to COVID-19 protocol, and also request a minute of silence. The BCAC would like to offer its tribute to all those who have lost their lives to COVID-19 and pray for their soul to rest in peace. And also, BCAC expresses gratitude to all the frontline COVID-19 warriors for their invaluable service. A minute of silence from each one of you. Thank you all for your kind cooperation. This conference is being organized under the aegis of the Direct Tax Expert Committee of BCIC, led by Mr. K. Balasubramanian, Vice President and Global Head, Corporate Tax, Wipro Limited. Mr. Sunil Kumar Dhareshwar, Senior Vice President and Global Head, Taxation, Infosys Limited. And Ms. Tapati Ghose, Partner, Deloitte, Haskins and Sales LLP. The chairman of this today's conference is our president, Mr. K.R. Shekhar, partner Deloitte. We'd like to thank the leaders of the Direct Tax Expert Committee of BCIC, Mr. Bala, Sunil, and Tapti, and a very special thanks to our president, Mr. K.R. Shekhar, for curating this session of this international tax conference for the benefit of our members. The theme of the conference is on tax policy in new normal world. The topic proposed to be addressed by a set of speakers and relevant and emerging tax landscape. We have invited eminent professionals to address and structure topics as a panel discussion. On behalf of BCIC, we express our sincere thanks to all the eminent speakers for accepting our invitation to address on this important subject. We would also like to thank all the participants for joining in today's session. We request all of you to kindly mute your mic and webcam option. This is to enhance and keep the bandwidth strong, as well as avoid any disturbance in the background during the session. Please post your questions in the chat box only or raise your hand. The speaker will respond to the question during the Q&A session or during the session. May I now invite the chairman of the conference, our president, Mr. K.R. Shekhar, to give his opening remarks and set the context for today's subject. Thanking you all once again to all of you. Over to you, President, sir.
Thank you, Prithvi. Thanks a lot. At the outset, on behalf of Bangalore Chamber of Industry and Commerce, and on behalf of me, I welcome every one of you to this 2 half-a-day webinar on international tax. It is a long practice of BCAC started by my dear friend and the past president of BCAC, K.R. Girish, when he was the chairman of the Direct Tax Expert Committee. He was the first person who introduced the International Tax Conference for Bangalore Chamber of Industry and Commerce. In 2000, professionals used to go outside Bangalore for the International Tax Conference, and K.R. Girish thought, why not Bangalore should have it? And that is how the International Tax Conference of BCAC started. And it has become a calendar event for BCAC since 2000 for so many years. After Girish, I continued the chairman and I continued it. And after that, Bala, Sunil and Tapti are continuing the tradition of having a 2-day international tax conference. But because of the COVID, we are not having a 2 full day, but however, we are having a 2 half-a-day webinar on the subject. I am very happy to inform you that we have more than 200 registrations for today and tomorrow. The excellent speakers on every topic that we have chosen. starting with Justice Ishwar, who needs no introduction to the Bangalore tax professionals, as he was a vice president in Income Tax Appellate Tribunal in Bangalore. Then is a lawyer by profession, became a tribunal member. Then he was a vice president of Income Tax Appellate Tribunal in Bangalore. Then he became a president of Income Tax Appellate Tribunal. Then he became a judge of Delhi High Court, and then he retired from Delhi High Court, and then he is practicing as a senior advocate in High Court and Supreme Court. Mr. Justice Ishwar has got a wealth of experience on tax as well as on the corporate laws, and he was also chairman of the Ishwar committee, which was constituted by the government for tax reforms. So we invited Justice Ishwar to give a keynote address. And then one of the important themes that is coming up internationally is the lowering the tax rates. We are not so sure, sorry, the governments are not so sure whether to keep the higher tax rates or to keep the lower tax rates, because there is always a conflicting views. One view is that if you lower the tax rate, there will be better collection, better compliances. And India has reduced the tax rates to 15% for the manufacturing companies and 25% for the normal companies. And now globally, all the there is a requirement, or there is insistence, or there is a belief that globally most of the countries will have uniform tax rate. And there is a lot of pros and cons on this, and the practicality and implementing on that global tax rates. So there cannot be any better person than Dr. Shom. When it comes to Dr. Shom, I'll introduce Dr. Shom in detail. But Dr. Shom has got a wealth economist and was advised various governments to speak on the topic. The third topic is about the taxation in the post-COVID scenario. Bala is the moderator, and we have invited some eminent people like P.V. Srinivasan, Mr. Mukesh Bhutani, and Vipul Javeri to address the topic. And followed that, Tapati Ghose is a moderator for one of the most what it call the most relevant topics in today's social security agreements and the labor law codes. And Tapati Ghose is joined by the practitioners like Veena Chalapa from Infosys and two government officials for giving their perspective. And followed by our Mohandas Pai, who needs no introduction to the Bangalore crowd as to what should be the taxation policy that the government of India should follow. And closing this today, tomorrow we are having a sessions starting with N. Venkatram, the Additional Solicitor General of India, to speak about the retrospective taxation, the pros and cons. Followed by that, we have a panel discussion by Sunil, moderated by Sunil. We have three eminent tax experts, Shikha Gupta, Amit Gupta, as well Nitya Srinivas, to talk about the challenges faced by the Indian companies in the present day. Then we have two sessions by eminent speakers, Mr. S. Ganesh, Senior Advocate on Recent Judicial Trends, and we have Mr. Dinesh Kanabar, who is going to speak about the OECD Pillar 1 and Pillar 2 approach, is it boon to India? And there's a lot of views about that, but we have invited Dinesh Kanabar to speak. Finally, we have a session on startups, moderated by our Padan Kincha, with three good panelists, Manohar, Ganesh, as well as Krishnan. And there cannot be any taxation conclusion without having a tax and economics. And we have Dr. M.R. Venkatesh, who recently authored a book on Indian economy and arising out of the traditional principles. And he is talking about the path to $5 trillion economy. So we have organized the various speakers on the various topics, and most of the topics are absolutely relevant. And we have some of the eminent people speaking about those topics. And I'm sure this conference will be of interest to everybody. Coming to the specific issues about the taxation in the post-COVID scenario, the government has done a little bit by reducing the tax rates, by introducing the what is called the faceless assessments, by introducing the e-assessments. On administrative side, the government is trying its level best, but there is always a gap between a cup and the lip, and that's what is happening. Whatever the intention of the government, at a ground level, there are various practical challenges faced by various taxpayers. Thanks to my expert committee leaders, Bala, Sunil, and Tapati, BCIC was very effective in representing various tax issues before the government. And we have been fortunate enough that last year the Honorable Finance Minister, Madam Nirmala Sitharaman, visited Bangalore and addressed the BCIC in the pre-budget and the post-budget. I'm also happy to inform you some of our suggestions what was given to the Honorable Minister was accepted, and some of the proposals have been introduced to a circulars. So thanks once again to my leadership team of Direct Tax Expert Committee. And we continue that path, and this year also BCSC has made a significant representations to the government on significant economic presence as well as on the TDS issues and the TCS issues. When we pointed to the government came out with the circular on the TDS. The recent circular on the TDS, what came out was drafted by our committee members, and it is thanks to our efforts. And similarly, significant economic presence, we are given a representation, and what we understand from the government is actively looking at our representation. So the Direct Tax Expert Committee has done a significant job in taking the interest of the members to the government and to the CBDT, and I welcome every one of you to give your perspective to my committee group. From a BCSC perspective, I assumed the role of president on August 20th, and after August 20th, we have done significant, we have got significant plans and ambitious plans to take BCSC forward. To many of you members are maybe aware that BCSC has gone international. We have opened our office in Tokyo in collaboration with Jetro, and we also gone beyond Bangalore to Hubli and Dharwad, and we are talking to various international chambers like Indo-Canada Chamber of Commerce and Industry, Vietnam Chamber, Taiwan, US, UK, and various countries. And very soon you will be seeing that BCSC will be sharing the understanding with all the international chambers, by which the members of BCSC can also become members of the international chambers. And in February, BCSC is planning to organize the Indo-Japan Investment Summit, by which we are going to have a dialogue with all the Japanese investors who are planning to come to India. So BCSC is truly representing the government as well as the interest of the industry to the government. And we are keen as a president of BCSC that we take the issues of the industry, issues impacting the industry, to achieve our ultimate vision that Nama Bangalore, Nama Karnataka, gateway to future India. And in few days, probably in the next 2 to 3 weeks, BCSC is coming out with a publication on the economic analysis. BCSC has constituted a small 5-member working group led by Mr. P. N. Vijay, former convener of economic cell of Bharatiya Janata Party, and is an investment banker and is independent director of various companies. He, along with Rumki Majumdar, Joydeep Gupta, Joydeep Nag, Om Prakash, and Venkata Krishnan are coming out with a economic analysis which will be presented to the Reserve Bank of India. It's almost another 2 to 3 weeks we are working out. So from a interest of the industry and from the interest of the taxpayers, BCS is doing a lot, and we hope to continue this march. On Monday, on October 4th, 4:30, the Commissioner of GST in Bangalore has invited us for the meeting, where me and my senior vice president, will be attending that, along with the chair and the co-chair of the Indirect Tax Committee. So my request to all the friends here, those who are active and those who are silently participating in BCSC activities, request you to keep more participation, and we look forward your views, your support to make sure the interest of the industry is protected. And thank you so much once again to Mr. Justice Ishwar, who has never said no to me whenever I invite him. I should thank him personally for that, because he's a great friend of mine. And more than a friend, is absolutely a mentor to whom I look up at on all discussing on the various tax issues. And we have the benefit of presence of Dr. Patsardi Shom. Both are two great learned people with whom I have been fortunate enough to move with them and understand from them. We are starting with Mr. Justice Ishwar is going to give the keynote address. After Justice Ishwar, Dr. Shom will be presenting on the global tax rates. Let me take the pleasure of introducing Justice Ishwar. As I said, Justice Ishwar is a lawyer by profession. He did his legal started with legal firm with K. Srinivasan and Co. And then he practiced law in Chennai Tribunal. And during this, when I was that was my formative years of chartered accountancy, where I used to meet Justice Ishwar as a practicing lawyer in those days in tribunal in Chennai, Nungambakam Road. From there, he rose to become a member of the Income Tax Appellate Tribunal. Then he became a vice president of the Income Tax Appellate Tribunal. He was posted in Bangalore for a brief period of 2 years. From vice president, he became a president of Income Tax Tribunal. from president, he became a judge of the Delhi High Court. He retired from the post-retirement. He was a chairman of the Tax Reforms Committee, appointed by the government. He, along with few professionals, gave various views. So we have Justice Ishwar, who will be giving what is called inaugural address, followed by Dr. Shom. I'm also introducing Dr. Shom. Dr. Patsardi Shom is a very, very eminent economist and a tax professional. When I say tax professional, he's not like me or any lawyer who gives advice, but an economist with full of tax knowledge. He was a former chairman of Tax Administrative Reform Commission, equivalent to Minister of State in the earlier UPA regime. And prior to that, he was an advisor to the various governments in India. He was an economist in IMF. As an economist of IMF, he was deputy to various countries, but particularly I would like to recall his services in Brazil and UK, where Brazil, thanks to his initiative, Brazil tax reforms, where Brazil introduced a lot of tax reforms, and Brazilian government awarded him with the highest civilian honors. He also served in UK HMRC as an IMF economist, and thanks to his service, with his permission, I'm telling that he is always considered what I would call a special citizen of UK. Whenever he wants, he can go and stay as a UK citizen, that he has got a special invite from Her Excellency in UK. And he is also chairman of International Tax Research Analysis Foundation, ITRAP. And I've been fortunate enough to be mentored by him for last 10 years in the tax economics. And there's a proverb in Tamil, people who knows Tamil can understand. That means even if you want to get hit by somebody in the head, it is better to get hit by a person who's wearing a golden ring so that you don't get pain. And I got many times done by the Dr. Shom, who was kind enough to correct me, educate me, and very honestly, I should tell you in this group now, my next book on taxation of digital economy on direct taxes is getting released in the next 1 month. I think I should give credit to Dr. Shom, who forced me to write that book. So we have two eminent professionals right now. I don't want to steal the thunder from them. Thank you so much, sir, Justice Ishwar, sir, and Dr. Shom for accepting our invite and gracing the occasion and giving your views. Thank you so much. Over to you, Justice Ishwar, for your keynote address.
Sir, you have to unmute, sir.
Mr. Shekhar, Chairman of the conference, Dr. Parthaji Shom, Chairman of the International Tax Research and Analysis Foundation, learned panelists, in the seminar. A very good afternoon to all of you. There are times when I have often wondered, what is it that I am doing? And this is one such time. In Tamil, which is my mother tongue, there is a saying which loosely translates into English like this, and I quote, "What role does a fly have in an iron smithy?" So what am I doing here? Sitting before you all in response to the kind invitation which Mr. Shekhar extended to me, a good friend. I can never resist his request to present the keynote address this afternoon in the opening session of a very important and very critical seminar on tax policy in a new normal world. I do not know what I am doing here. Till about 7 years back, I was an adjudicator, if I can use that broad expression, trying to find out which of the two rival viewpoints is the better one, or as the Americans used to say, which side has the better lawyer. My claims to any knowledge of tax policy are based on the untenable assumption that my stint in the Income Tax Appellate Tribunal and the Delhi High Court must have given me a bright insight into the policy. But that is only a myth. Personally speaking, I have no such claims. What little I think I know of this branch of law, which is a very fascinating branch, the taxation law, is what the professionals and the lawyers taught me and nothing more. In the first fortnight of March 2020, nobody would have dreamt of the coming months the way they have turned out to be. The world turned upside down. Our country was one of the worst affected just because of its sheer numbers. Comparisons were made inevitably with the Spanish flu, with the plague in the late 19th century, and with the SARS epidemic in the mid-90s. But there was a very significant difference in the manner in which the world was affected by the present COVID pandemic compared to the previous epidemics. The countries of the world today are more closer to each other than ever before. The policies of one country affect other countries, whether they are friends or foes, in methods which defy logic or conception. Countries would like to think that they are sovereign powers and can frame policies that cannot be objected to by other countries. But that is also a myth today in today's world. Communication facilities of all kinds and forms are at their technological best today, and every country now feels the need to be more accountable to the world and its people. Living in isolation is just unthinkable today. The COVID pandemic, in effect, has ushered in a new world if one takes a pause to look at the situation objectively. Today, the world leaders and their administrations interact with each other more frequently to exchange concerns that are of mutual interest. They have an anxiety while working together to prevent a repetition of the crisis. The watchword now is to act together, combine the efforts, and work jointly rather than deal with concerns individually and separately. This disease undoubtedly has brought misery and grief to the world, but we cannot fail to look at the positive side also. There is great comfort in thinking that the enemy is common and hence there is a need to act together. In July 2021, almost 125 to 130 countries of the world, representing around 90% of the world GDP, combined to make a two-pillar statement to ensure fairness in international taxation and to ensure multinational enterprises pay their fair share of taxes wherever they operate. This seems to be the result of the efforts taken unceasingly by the OECD over the last decade or so, and it is expected to ensure some sort of stability and certainty in the matter of multinational taxation. The second of the two-pillar statement was to place competition above the corporate tax through the introduction of a global minimum corporate tax rate, which the countries are expected to use to protect their tax basis. It is also expected, according to OECD's own views, that participating countries may rationalize their financial budgets and make use of the fair share of revenues for their infrastructure projects, particularly in the primary health sector, and strengthen them in light of their experience during the pandemic. After all, the welfare of the people is the ultimate goal of all tax-raising proposals. The developing countries are expected to welcome the move. The negotiations are expected to come to a fruition this month end, with implementation on a full scale scheduled by 2023. I am glad to note that the global minimum corporate tax rate is a subject which is slated for discussion in the conference today or tomorrow. The OECD report on tax policy during COVID-19 pandemic recognizes the measures taken or proposed to be taken by the countries in the wake of the pandemic with regard to their taxation measures. Countries have achieved unparalleled levels. This is the expression used by OECD in terms of government support to business and households. It refers to fiscal packages such as loan guarantees, job retention schemes, direct transfers, expanded access to benefits, and tax measures. The aim of all countries during the crisis, which by no means can be said to be over, has been to support incomes, preserve jobs and minimum wages, and take measures to keep businesses afloat. In India, we have had our own peculiar problems which add gravity to the general situation. These include natural calamities such as floods, landslides, and the like, and a very humanitarian problem of migrant labor, shortage of oxygen during the worst times of the COVID, and so on. The judiciary, which is one important pillar of the state, has been at the forefront in tackling these issues with empathy, sympathy, and great vision. And it is equally true that the state did not consider such judicial proceedings as adversarial. India has had extended periods of lockdown with drastic effects on businesses, particularly the self-employed and the daily wage earner. While countries like Singapore and Australia have taken a very pragmatic and even a large-hearted view of the taxing issues arising out of travel restrictions on account of the pandemic, it is for consideration whether our taxation authorities could have adopted a more sympathetic and understanding view in this behalf. The power to remove difficulties which is available statutorily to the finance ministry exists precisely for such situations, and if taxpayers had expected more to be done in terms of relaxation of the conditions for payment of advance tax, tax deducted at source, and the like, they cannot be faulted. There is perhaps a feeling that the reduced rates of tax deducted at source were withdrawn a bit too soon. Leaving more cash in the hands of the people is critical during such difficult times. There is also probably a feeling that GST rates continued to be almost the same during the worst period of the pandemic, and there was scope for more relief. A resilient people undoubtedly are a blessing to any government, and I understand that the first half of the present financial year has shown an increasing trend of gross direct tax collection, which appears to have touched about 6.5 lakhs crores. The OECD rightly seems to have cautioned against premature withdrawal of reliefs so that the serious impact on households in the more vulnerable sectors can be minimized, and will also ensure an equal impact of the tax relief measures. The support extended to the people in countries like ours is recommended to be withdrawn gradually so that you don't have the cliff edge effect. These are some sane advice given by the OECD in its report. Tax policy, particularly in the new normal world post-pandemic, is not a one-way affair. People equally have the duty to shoulder the burden. For instance, it is incumbent on the people to keep their consumption levels low even after the curbs are removed. From the side of the government, tax policy measures should be carefully timed, should be temporary, should be carefully watched, should be targeted at areas where equity needs them more, should be helpful to cases of relocation of industry, and should foster recapitalization of business, and should be aligned with health needs and social objectives. The anxiety to ensure equity in the matter of tax policy benefits, should drive its implementation. I will wind up with a fervent appeal to the Finance Ministry, more particularly to the Central Board of Direct Taxes. The COVID pandemic, which, as I said, is by no means over, has changed the way world thinks and acts. Personal meetings and travel involving irregular timings for work and rest, affecting both physical and mental health, are out. The same results are being achieved through video conferencing. Today's proceedings are an example. The courts have started using it in a big way with amazing results. The Central Board cannot be faulted for choosing the present times for the faceless assessments. But my appeal to them is to implement the scheme without compromising on the basic rules of natural justice. Litigation all around the country, and I keep tabs on the litigation, in the wake of implementing the scheme, the faceless assessment scheme, indicates unmistakably the root of the malady. The faceless assessment scheme had as its objective the elimination of deviant behavior, both by the taxpayer and by the tax gatherer. But its aim was never to substitute the principles of fair hearing and fair procedure by impatience on the part of tax administration. Much more sensitiveness seems to be the need of the hour for a successful implementation of the scheme, as the proliferating litigation all over the country shows. The internet or the computer cannot produce evidence by itself. The records still have to be examined to locate, collate, and present the evidence, all of which may not at all times be in digital form, so that they can be retrieved and presented immediately. The common refrain is the unrealistically short time that is allowed in the matter of presentation of evidence or to comply with notices. There is also a need to revisit the decision to implement the faceless appeals scheme, and it would be of great interest for those in charge to read what the great English and American judges have to say on this. Such things certainly do not help taxpayers, but the more fundamental problem is that they erode the trust and confidence. It is no use talking about tax policy and multinational taxation and equity in the matter of taxing rights of countries when equity is denied to the domestic taxpayers. It is well to remember that the executive arbitrariness and impatience may produce results in the short term, but in the ultimate analysis, it is very likely to cost the government much more in terms of alienation of the people whom it has been elected democratically to serve. With these few remarks, I wish this international conference on tax policy in the new normal world every success. I am sure the participants will benefit immensely from the proceedings in which leading luminaries in their respective fields will be presenting their views. Thank you very much, and Jai Hind.
Thank you, sir. Thanks a lot for your lucid and remarks, as well as your suggestions. And certainly we take your point on representing to the government on the faceless assessments, as well as the litigation that is arising on account of the faceless assessments. Certainly that's a matter of concern, particularly, in fact, we just point just to the benefit of the members. When Madam Nirmala Sitharaman visited Bangalore, me and Bala and Sunil pointed out that the intention behind the amendment of 147 is different than what is implemented. We said that though your intention of 147 amending 147 that you would like to catch the tax evaders, but the way the provisions have been worded is such that every taxpayer will get a 147 notice, irrespective of the fact whether there is a escaping or not. And Madam assured at that point of time, yes, no share, it is only for catching the tax evaders. But unfortunately, what we've seen in the last 6 months, plethora of notices under 147 has been issued to every taxpayer. And your point is very valid. There is challenges on the administration, which is far different from the intention. And certainly from a chamber perspective, we will take that point, sir. Thank you so much once again for accepting our invite and gracing the occasion and giving your remarks. Now I'll invite Dr. Shom to give his special address on the global effective tax rates, what called global minimal tax rates. And as I said, there cannot be any better person than Dr. Shom, as he mixes tax and economics as well as wearing the government cap. He can give multiple perspectives. Thanks to Dr. Shom for accepting our invite. And again, he is one among the persons like Justice Ishwar, who has never said no to me whenever I invite him. Despite he is in UK, he has been kind enough to participate from UK. Thank you so much, sir. Over to you, sir. Rupa, can you go to Dr. Shom's slides, Rupa? Rupa?
Sir, he has to unmute from his side, sir.
Yes, unmute. Okay. Sir, can you unmute? Yeah, Rupa, present Dr. Shom's slides, Rupa. You have to manage Dr. Shom's slides.
Yes, sir, we'll do, sir.
Just put on a presentation mode, Rupa. Yeah. Yes, sir.
Okay. Thank you very much. I hope everyone can hear me. Here at the moment, the impact of the pandemic is keeping me in London. But thanks, as always, to Mr. K.R. Sekar for inviting me. Of course, I'm very familiar with BCIC, and therefore, thanks also to BCIC. And I congratulate Mr. Sekar for becoming president of BCIC, which is a kind of a natural thing for him to assume. Without further ado, let me proceed to talk a little bit. Next slide, please, on the global minimum tax. As Justice Ishwar has informed already on the OECD's work and also on administration, etc., I will provide probably a continuity in providing a slightly economist's perspective on similar issues on the global minimum tax. The OECD hosted talks on a global minimum corporate tax, and 130 countries backed that agreement, which is the important thing to note here. Most countries backed a global overhaul of all the entire cross-border M&E taxation, and that new rules should be drawn up where companies are taxed at least a 15% rate. This agreement could yield about $150 billion in additional global tax revenues annually. Now, what is important also is that the companies will be taxed essentially more in countries which are following a very low tax rate, and there is no reason not to mention countries like Ireland, Netherlands, and so on, which for historical reasons had been trying to make up for lost revenue. But today, the international community of authorities have come to the conclusion that international taxation should be better shared across the board. Now, this new arrangement would actually shift the taxing rights on more than 100 billion of profits to countries where the profits are actually earned, or where they are that was contrary to practice beginning from the 1920s and continuing through the work of OECD in earlier years, because OECD, after all, is a mix of advanced economies. And therefore, from their point of view, it was the right place of taxation, and the revenue location would be where tax is actually generated from the capital or the location of the capital. From that, the whole effort in base erosion profit shifting project, BEPS project of the OECD, moved on to the idea that it should also recognize the source of where the income is being generated from the capital that is maybe located elsewhere. So, or the ownership of capital where it may be located elsewhere. Pillar 1 actually talks of the overall scope of this global minimum tax, and it will not be on everything, of course, but it would depend on the global turnover of an MNC. If it is above 20 billion euro with a pre-tax profitability of above 10%. So if that, so it is not a very wide-ranging, widely scoped tax if you really think about it. It will be implemented from 2023, and the turnover threshold will be reduced to 10 billion from 20 billion, contingent on successful implementation. And a 1-year review will be carried out after about 7 years after the agreement. So a long review will take place after the 7 years have elapsed. And also financial services are not included in this. Next slide, please. Yes. So pillar 2, the scope is basically what is called globe rules, and they will apply to multinational enterprises over 750 million threshold. And this emanates from the BEPS Action 13 country by country reporting. So in country by country reporting, if MNEs are reporting 750 million, then the globe rules will begin to apply. And what is the globe rules? It is very important because it implies an income inclusion rule to MNEs, which are headquartered in a country, apart from where the it is operating and so on and so forth, headquartered in a country, even if they do not meet the threshold. So even if they do not meet the threshold, the income inclusion rule would subject foreign income and controlled entities to an agreed minimum tax in the parent jurisdiction, complemented by a switchover rule addressing low taxed permanent enterprises that are exempted by treaty. So the income inclusion rule gives more clout to the taxability of multinational enterprises. Rightly so, government entities, international organizations, etc., or any holding by them used by such entities, they will not be subject to the globe rules. The minimum tax used for IIR also under an untaxed payment rule will be at least 15%. So the minimum tax basically is something that whether it is the generalized 15% or the IIR, the minimum rate applied will be 15%. It is not the rate, it's a minimum rate. Now, having with this optimism, there is always an issue with the US Congress, because agreement, in my view, will actually be quite difficult in the US Congress, because the Democrats are also split in the House of Representatives, even though there is a majority there. Where Representative Kevin Brady, the top Republican on the tax writing House Ways and Means Committee, described it as a dangerous economic surrender that sends US jobs overseas undermines our economy, strips away our US tax base. So one is on a kind of tenterhook to see whether this will work or not. But over and above that, a point that has to be mentioned is that out of the amount of the 100 billion that will be kind of transferred from among countries, how much will emerging economies get? That is a question that has not really been formally estimated, but some estimations have been made by scholars, and it is not a big proportion. So from an Indian point of view, the hopefully some scholars will also make some estimations about how much India will gain from this new minimum tax and the IIR and so on and so forth. Next, please. Now, what I want to say is that all of you will know this totally, but in India, the existing manufacturing sector corporate income tax is already 25.17%, and new manufacturing companies are already getting, while they have a lower tax, it's 17%, and therefore we will not be affected as such by the minimum tax. But one has to keep in mind that just because it is 25.17 and 17.16, there really is no need to reduce the corporate tax rate further. But at the same time, under forthcoming budgets, it should not be increased because of the rationale of the pandemic. But tax incentives probably should be frozen for about 5 years, and instead, probably the administration should focus on the ease of paying taxes. As Justice Eastwood has pointed out, the administration's role is central in all of this. Next. The one thing next, please, next slide. Yes, one thing I wanted to mention in that, you see, comparing India and China, the total tax and contribution rate in terms of percentage of profit in India is almost 50%, but in China it is 60%. But look at the number of payments made. In India, the number of payments made in a year is 11. In China, it is 7. So the thing is, there is, carrying on with the administration argument, space for improvement, and also the number of hours that are spent per year in India are 252, whereas in China it is 138. So the ease of paying taxes has to move up. And overall rank of EPT in China also, it is not very, very great. It is 105. But in India, among the number of countries covered, it is 115, which is worse. Brazil is, in my the sample that I took, is the worst at 184. But Brazil really, unfortunately, is a basket case. And sometimes I feel a little embarrassed that despite, of course, it has already been 20-25 years since I had worked on Brazil, and I always say that after fundamental tax reform, unless the reform is looked at and examined very carefully every 5 years, it collapses, and Brazil is an instance in point. So sometimes I'm embarrassed that despite all the civilian honor, the highest civilian honor of the country, etc., that today Brazil's situation is pretty dire. Next, please, next slide. Next slide, please. Yeah. Actually, the thing is, in this, just look at the fourth bullet. There, the post-filing index, there India has improved a lot, but it is still quite a lot of space for improvement. The post-filing has been helped because of computerization. But we know today there is problem in the tax administration in terms of the filing date extension and all that, but that we have to be patient. It will be worked out, but there is always room for improvement. Next slide. Yes, this is the point that the result of the great improvement in post-filing is the electronic tax payment mechanisms, and it has speeded up the post-filing processes. The next, please. Here, here I wanted to bring this. This I've taken from my recent book on the history, theory, law, and tax administration of taxation, which has just come out from Springer International Publications. There I made this idea, which was an idea, but I've simplified it and consolidated from the Tax Administration Reform Commission that was formed, and in India, that actually was formed in 2013 and went on till 2015 into the current government, into the UPA, from the UPA to the BJP government. So it actually traversed both the administrations. But one thing in administration in India that is to be noted is that in a cross-country comparison, when we took 50 countries to compare, only the other country where the two departments were still separated were India and Indonesia. Indonesia was already talking about combining them. Why should India also combine, one may ask? The reason being that, in fact, both for tax administrators and for taxpayers, the convenience of receiving taxes and paying taxes will be so much more. There will be cross information between the two departments where, in fact, the tax evasion has to go down. This is the result that has occurred in every country after they combined the two departments. In India, it will also be so much easier if there's an income tax payer who's also a GST payer. They can really be using one return and with the other. So I think that given that we are talking about international taxation, this is one international practice that India has to adopt, and you see how it will work. You start on the left side with the business taxes, goods and services, corporate, etc., large businesses, small businesses, and then on the right side, major personal income tax, personal capital gains. Then the personal income tax and all that is, you have complex individuals, and then you have employees who just get the salaries and interest and so on, and maybe even some may get dividends. All of that are to be functional and done, to be field oriented and like that. Then they should all be demanding services from what are called the functional departments that will do the research and analysis, carry out the compliance of both branches, audit debt that taxpayers are incurring, fraud, and all legal matters. That should be combined. So this is the general practice today, and we should do it. Now, next slide. Yeah. One thing I wanted to say is that this government has actually done a good thing. If I look at CIT and MAT, which many of you will be dealing with, when it was introduced, MAT originally, you see that CIT and MAT were going in the same direction. Both were going down for some time. Then they, in the graph, they began to approach each other, and in the final years, both are again going down. What do I mean by this? This is that MAT is a minimum tax for a given CIT rate. So if the CIT rate, let's say, comes down, then the MAT must also come down. because the MAT should, so the new government has taken measures where the CIT rate, as it has gone down, they've also taken measures to bring down the MAT rate, which is the rational thing to do. In between, for so many years, including the NDA government, UPA, etc., you see that they were approaching as though when the CIT rate was reduced, the MAT was used to make up for that loss, which should not be the case. The MAT should be used only to get the minimum of the current CIT rate. The current CIT rate should be accepted. So this is something that many people don't look at, but it should be recognized. Finally, next slide, please. Next. Yeah. No, next slide. This I've already covered. Yeah. Next slide, the issue of equality. You heard already about the pandemic, the empathy and all that. Now we can talk about it, but the reality today is that the individual income tax rates in India are among the lowest in the world. We should seriously think whether India can afford such low rates, where even a high tax rate on the super rich is not accepted or acceptable. I find one has to really, as a society, think about it. Second is, wealth tax was introduced years ago in the 60s and then finally taken away in 2015 or so for various arguments. Today, however, there is no reason for taking it away, because recent years wealth building has occurred not through economic fundamentals always, but on destabilizing speculation in the finance markets. And in India too, wealth building is no longer based on tax administration capability, because it could be collected. Today our tax administration is much more modern. The next reason is our wealth gap. If it is believable or not, I'll speak in terms of rates. The wealth gap, the increase in the wealth gap is occurring at the highest rate in the world in India. Please note that the increase in the wealth gap is occurring, the increase is occurring at the highest rate in among all countries in India. As such a poor country, can we afford this? We have to think about it. Also, so much accumulated wealth is economically unproductive. Should we not make it a flow, tax it, and use it? And another argument that I find is that foreign tax credit you would not get. Of course, you can work through double tax agreements and get a foreign tax credit. You just have to work in it. So I think we should seriously think about reintroducing a wealth tax, not only because of pandemic, of course for the pandemic, but also for the health of the country, the poverty, the inequality, the highest rate of growth of inequality of wealth in the country, in the world. It is a bit of a shock to the rest of the world. I know I'm addressing a community of great professionals, achievers at the highest status of our society. Many of us do social work. Many of us are religiously oriented and pious. But in practice in the field, we must accept to show that we are willing to embrace and push for equality. With that, I thank BCIC and the audience for having the patience to hear me out. Thank you very much.
Thank you, sir. As usual, is always a revolutionary from a taxation perspective. You are one person who never hesitated to give your frank views, whether it is introduction of wealth tax or introduction of, I don't say inheritance tax, but you are one person who always believed that equalization of wealth is very important, and therefore one of the ways is to introduce a wealth tax. And I have, me and Mukesh have been fortunate to discuss with you on introducing the banking cash transaction tax, which many of us, many of the professionals do not even prefer it. But no, we know you. Thank you so much, sir, for your great views and great thoughts on certainly your points on the global tax rate and US Congress. It's very, very relevant. Once again, thank you so much for accepting our invite and being with us. And once again, I personally thank you for accepting my invite, because you have never said no to me on any occasion, whether it is a Deloitte event, whether it is a BCIC event, you have never said no to me. I should thank you for that. And I look forward to see you in Bangalore very soon. That's what I would say that. Thank you so much, sir.
Thank you.
Thank you so much, sir. And we will be couriering the mementos to the speakers, but sir, I'll be handing over a memento to Hilna Pal in Bangalore so that she can take it forward, and when we come back to Bangalore, she can deliver it. Thank you so much,
Thank
sir. The next session is moderated by Bala. I don't need to introduce Bala here to most of that, but customer is something I need to do that. Bala is the chartered accountant, head of global tax of Wipro. He's our senior vice president taxation and heading the entire Wipro global tax. A great professional to work with, to associated with, and I've been talking to Bala for last 20 years, if I'm right. And ever since, and the one thing which fortunately Bala has got his former boss, I would not call boss, his mentor PVS also on the panel, because PVS and Bala both are replicas in that sense. If you speak to PVS, you don't have to speak to Bala. If you speak to Bala, you don't have to speak to PVS. They are replicas in the tax world. Thanks, Bala, for taking this session. Back to you, Bala, on a very important topic on tax policy during the COVID world. Thanks, Bala. Only
Thanks,
Pala, one
Shekhar.
request. Mukesh is in London. He has got
Yeah,
arbitration, so he has to leave in another 30 minutes. Thanks, Mukesh, despite all your busy schedule, participating in this. I requested Bala to shoot his questions to you first and then spare you a little bit and then take it to Vipul and previous Mukesh. Thank you.
Thanks, and thanks,
no,
and
no,
my sincere apologies.
no, absolutely. Thanks, Shekhar, and I think we'll cut to the chase and make the best use of the time that is available to us. I know we are running slightly behind schedule as well. So without I think I don't need to introduce my panelists. They are eminent speakers. We know all of them, so we'll just jump into the discussion straight away. So the topic for us is on the tax policy in the new normal world, right? The post-COVID recovery. But before that, I just want to take a step back, and look at, probably, most of us would do this, right? Pre-COVID and post-COVID. But pre-COVID, from an economy point of view, from a tax point of view, I think when we take a look back at, in hindsight now, I would say it's a very important thing to look at, because many of us did not feel that we were put through to a a reform mechanism which we did not even know, right? Which we did not even feel, because it was not done in a very big bang way, but it was done in small increments. That, if we look at it in a perspective, I feel that it was done with a specific agenda in mind, because when the government took over, there was a lot of discussion when this NDA government took over in 2014. There was a lot of discussion on tax terrorism, etc., etc. But the government took it in the right spirit and right perspective, started negotiating treaties, did not touch the retrospective taxation at that time, but did it very recently, when the issues in the arbitration come to some kind of a fusion. They looked at GAR in a different perspective, introduced it, deferred it multiple times, but introduced it from 2017. They also, took stock of certain litigation aspects, introduced the Vivad Se Vishwas scheme, made lot of amendments in the Income Tax Act, like introduction of equalization levy, reacting to the BEPS action plans, etc., etc. So they were very, structured, I would say, amendments and reform measures which were taken. But as I said, we did not even feel that we were going through all of this. But suddenly I feel that they came a pause because of the COVID issue. But so we will take a pause there, and probably take certain comments from our panelists on the pre-COVID economic scenario and the tax reform measures that this government was embarking on, and what COVID did to it. We'll look into it. But what are your opening thoughts on this, Mukesh? To start with you.
Thank you, Bala, and thanks, Sekar, for inviting me. It's indeed a privilege to be on this platform. Let me just try and divide this in two parts: the pre-COVID and the post-COVID. I think clearly the commitment is visible. Whether the commitment is coming by way of legislative measures or administrative measures, they're visible on both the fronts. We've seen some. I hesitate in using the word big bang, but I think we've seen some reformative measures, at least on the tax policy front, at multiple levels, whether from a policy outlook standpoint or from a administrative standpoint. So just to list down few of them would mean one, the complete overhauling of the SETCOM, which was not working. The litigation pending, which I think has reduced a lot with Vivad Se Vishwas scheme. So there are two ways to look at that litigation. One is in terms of quantum of cases, and second is in terms of quantums locked in litigation. On the first front, I think we've made tremendous progress. So if you look at a typical scenario in a tribunal or in a high court or in the Supreme Court, these so-called cases which had demands which were just above the threshold, the government has been consistently revising the threshold for the past 3 years. But this was just about, if you look at a multinational which is facing a situation of, say, a million or two, the classic approach of the multinational is let's settle. Even if we have one and the department is in appeal, let's pay 50% taxes and move on. So you will see the impact of this by way of reduced burden. At least it is very clearly visible at the tribunal level. In fact, some of the advocates and the tribunal members also personally acknowledged that the quantum of workload has come down, which is very good news. I also think that we should not forget the landmark 15% corporate tax rate, which Dr. Shom also spoke about. It came as a pleasant surprise because it came as an ordinance. I don't know if in the past there have been such reduction of corporate tax rates from avenues such as ordinances. It has come by way of the Annual Finance Act, but it had come by way of an ordinance because the government felt that there is an urgent need. I also feel that the current surge of FDIs we are getting is an outcome of not just greenfield projects, but the benefit that were given to sovereign funds and pension funds, and consistent relaxation on the administrative front as well as to what do you classify these as. I think all of these put together clearly, in my view, make out a nice package in the pre-COVID area. Let me come to your second point, Bala. Have we paused in the post-COVID area? I think philosophically speaking, you need to ask a question: are you seeing the half glass full or half glass empty? If I look at the half glass full, I still feel that you can recount many of the measures that were taken post-COVID. Having said that, most of the measures were on administrative front by way of relaxation in filing deadlines, so on and so forth. But there were many other changes that were taken in the Finance Act of 2021 as well, whether that is by way of revamping the advance ruling mechanism with the board of approvals being put in place. So I think there have been many other changes. One noteworthy change I'd like to talk about is the reopening of the assessment. I think this has been a bone of contention for many taxpayers, whether they are individual or corporate taxpayers. I would consider this as landmark change. We are still seeing many niggling issues, whether they are arising out of faceless assessment or the revenue still insisting on application of the old reopening of assessment proceedings for the new cases. But I think those will hopefully get resolved with the intervention of the court. I think abolition of dividend distribution tax, in my view, clearly is landmark, and many of the changes that has been made, particularly those that will impact small classes of share of taxpayers, extending the benefits of social security scheme to the unorganized labor force, which is what we classically called as gig workers, again is a very, very important change. So I think all in all, I'd like to believe that the reforms agenda continues. It may not be very visible in the post-COVID era because of the thrust on extension of timelines. But I think from a policy standpoint as well, these are the changes, the effect and the impact of this, or the positive impact of this, we will be able to feel in the years to come. Thank you, Bala.
Thanks, Mukesh. Vipul, do you want to uh, supplement what Mukesh remarked?
Yeah, sure. Thanks. So really, I mean, Mukesh has covered on a lot about what is changing today. But maybe I would like to peep deeper into the future to say what will be that new normal, because even as we are what we are experiencing, I don't think really we have reached the new normal. New normal is evolving. And therefore, maybe one way I would try to, predict what that new normal could be is both philosophical and at a very 50,000 feet level, so as to say. So, if I were to contrast it, what was the old normal? Old normal was something where businesses were globalizing. The governments were competing to attract businesses to invest and supply goods and services to serve their home market. So, all of this was really about, how do you attract investment or serve your local market for whatever they aspired, which really meant that, all the have-nots were actually not so important in any kind of the old normal. All the haves were really the businesses with resources, the countries with lot of demand and all, they were looked after well. What is now emerging? What is emerging is the businesses, apart from having to adapt to, the changing normal as to, what they deliver, how they deliver, whether it's goods or services, and where they deliver. I think all that is changing. The governments and policy makers, they are increasingly focusing, on increasing the domestic economic activity, as opposed to, just making sure that their foreign businesses come and, sell goods and services in the home market. So the domestic, even mature countries, developed countries like US are changing their policy to make sure that their global organizations start operating more locally than globally. Not to say that they should not sell overseas, but local economic activity is gaining importance. And lastly, what is therefore happening is that the tax administrations also are increasingly aligning themselves and the fiscal legislation to avoid unhealthy competition. I think that is one paradigm shift that we are seeing. There is more and more alignment as to how the pillar 1, pillar 2, even the BEPS, all this is leading to that one thing that, okay, let's exchange information, let's do things which are not creating unhealthy competition amongst the businesses and countries. And I think this is what I would think the new normal is leading to, which translated at ground level, what will happen is increased compliance. I think compliance will become more and more difficult in a manner of speaking. Digitization and technology will become more and more prevalent. They have to use all that if all the information of all the global businesses have to be really connected to see what is the revenue, what is the profit, and how each one will share. So a lot will change in that direction, I would think.
Thanks, Vipul. PV has a little pointed question to you. while Mukesh and Vipul have covered what governments have done in the past and what can we expect, but what we also see globally is the countries are, while there was a trend that they were reducing rates, like US reduced, India reduced, like Mukesh pointed out, we came down to 15%. But in the recent past, UK increased, and it said that it would go up to 23%. There are a lot of buzz in the US that the rate may go up from 21 to 25%, right? But India resisted any temptation to increase the rate even during the worst of times. So what are your thoughts on rates? I don't think this is related to the global minimum tax, but the developed countries, so to say, are looking at increasing the rate. So what are your thoughts in addition to what Vipul and Mukesh have mentioned here?
I would look at it that the reduction in the rates which the government has initiated, 25% rate and a 15% rate for new manufacturing facility. These are all directional reforms taken with well-intended purposes. What I will say is to attract investments into India. So if other countries are increasing, and certainly if, it's not necessary that Europe increases, then you may not get much of an impact. But if Asian countries also tend to increase, then we must presume that more and more manufacturing facilities will come to India with a 15% rate. The 15% rate is an attraction, is an incentive to relocate manufacturing centers into India. So India may not go the way of increasing the rates. What it would possibly do is it is possible. We are seeing some indication that the taxation is being now shifted from corporates to individuals. Individuals are paying a very high rate. Dividend taxation, if it's taxed in the hands of promoter, certainly is going to yield much more taxation than what would have yielded as dividend distribution tax. Of course, there's a trade-off that when the treaty is applied, you will collect much less than what you would have collected as a DDT. These issues are going to certainly do a balancing. I would think that India may not change the corporate tax rates and align it to the global level, even if there's a revenue pressure, if I have to do. And all said, Bala, many good things have been done in the earlier discussion itself. Now, MAT was a worry for any government. It's carrying a liability for the future. Yeah, and it is not forming part of the fiscal deficit also in a manner of speaking, because you feel that you have collected what you have to collect, but certainly is a liability for the future. The measures which have been taken is to address that future liability in a current form, to say that you give up your MAT expectation in the future, take a lower rate, and then live with it. That means something has been done already to give away something and take something from the taxpayer. So we must possibly think that the rate is actually 35. They are given some concessions to say you trade off by forfeiting your MAT, and they have somewhat simplified it to say that please take this and leave out your MAT credit in a way. This can be one way of looking at it. Even the Singapore Treaty, the Mauritius treaties have all been realigned. And you find that the FDI has not come down, the foreign inflows have not come down. You may say it was very timely because there's a liquidity available, interest rates are all playing it so low that India makes a very good destination to invest money. So I would look at it that all the things which have been done, they have all been well timed, they have all been in place at the right time, at the right place. So now to go and increase the tax rate will be to catch up with the world to see how to raise revenue. Now, actually, the problem should be how to raise investments rather than how to raise revenue. If you raise investments, possibly the revenue also will come, not in the same time zone, possibly with a little lag. But that's the way I think the government is going, and that's the way it's to go, in my view. I leave that those thoughts. I leave.
Thank you. Thanks, PVS. Mukesh, coming back to you, you mentioned about, we discussed about a lot of good, steps in the right direction, etc. But, we should not also lose sight of certain stringent measures that were introduced, like, 56 to 10. A lot of startups, had grave concerns. We still have, a lot of concerns on that. Linking of Aadhaar to PAN, while the timelines are getting extended, but there are still concerns as to why the government is, wanting to look at enormous amount of changes on TDS and TCS, right? And to levy both TDS and TCS on the same transaction and leave a confusion in the minds of the businesses. These are I would say rigors of compliance which is going up and up every day for businesses. So how do you look at these proposals, in the context of what we have discussed so far, Mukesh?
Bala, before I answer your question, just on the earlier one, I just got the latest figures on Vivad Se Vishwas scheme. 1,32,000 declarations, and we just missed the 1 lakh crore mark. The exact figure is 99,765 crores of tax collected. So crores of disputed tax, sorry, not tax
Correct.
collected. Tax
Correct.
collected would be less.
Could be
Now,
less, yes.
yeah, this is very interesting because last I saw a figure of 6 lakhs crore, 6 lakhs of outstanding tax cases roundabout. So this gives an indication that roughly around over 22-23% taxes saved. Taxes locked in litigation would be much more. I think it'll be over 10 lakh crore. So that's just 10%. But I think this will just unclog the dispute resolution machinery for helping both the administration and the quasi judicial and the courts to focus more on the big cases. Coming back to your question, yes, there are some niggling issues. I think the reason for this is an element of overzealousness to track all forms of taxpayers. So we have seen it in the last 2 decades how the net of TDS has been expanded over a period of time. Now, for the governments, the cost of administering a TDS is very simple because you work on a self-compliance basis. We have one of the most stringent laws, and hence it makes sense logically for the government to keep on expanding the role of TCS. Now, in that overzealousness arises compliance burdens, arises inconsistency that you spoke about. And I think the tax administration has to be guarded about it. I think the other challenge that we have is the cost of doing something wrong in India can be tremendous. I mean, we still have some most draconian penalties. So the message to the lawmakers should be that if a taxpayer defaults, then let him pay interest, tell him that he's not liable for penalty and move on with it. So I think that's clearly a gap which is there in our tax policy. And that gap gets further exaggerated because of the approach that typically a field officer takes at the level, which is inconsistent. You may come across a reasonable officer in one city and a totally unreasonable officer in another city. Now, if the answer to all of that is faceless scheme, including the faceless TDS scheme, we still need to wait and see how is that going to work very effectively. But clearly, there is a larger message to the tax administration that things ought to loosen up a bit for all the inconsistency that you just pointed out.
Thanks, Mukesh. Mukesh, to your point on this, the Vivad Se Vishwas scheme and the figures that you pointed out, while it's, these are good numbers, 1,32,000 cases at one go is not a simple thing. But, I think for all the benefits of the electronic hearings that we have had, the cases have piled up, right? Both at the tribunal level and at the High Court level. So have we taken, one step forward and 2 steps backward because of COVID? So is there something more that the government should do on the litigation space? How to ease this up?
Conventionally, as Indians, we have one good quality in us, which is try it, fall it, learn from those experiences, and then work on it, because nothing works perfectly in our country. And I think our tax administration has fallen into that trap. I think the experiences on faceless assessment is, in my view, a repetition of a patchy implementation of the GST law. But we saw over a period of time, we improved and we learned from our experiences. I think that seems to be the same philosophy for faceless assessment. I think the biggest flaw in the faceless assessment, in my view, is that the revenue, despite having the benefit of all the wisdom and advice that was given, did not act on it on time. And even today, it is not acting on it. So if there are a clutch of writ petitions in the high courts, why don't we deal with it right now? Just because a matter is sub judice before a court of law, that doesn't mean that the tax administration, either through a legislative amendment or an administrative amendment can't intervene. So I think that's a challenge that we have, and that's weakness continues to be one of our great weaknesses of a tax policy framework. I think the other challenge that we have is inability to factor in the feedback from the industry. I'll just give you one example. We were at pains, at least on 2-3 platforms, to explain to the officials who were mandated with the responsibility for faceless assessment scheme that you cannot have a faceless assessment scheme where you deny something which is a fundamental right, which is right to be represented. In fact, after the Prime Minister announced the contours of the taxpayer charter, in which right to representation was enshrined as one of the important rights, we linked it back to the faceless assessment scheme. And we pointed out to the lawmakers that this faceless assessment scheme has to enshrine in it the right to be represented. And the right to be represented is not on a laptop or without knowing who you are representing on the other side. It is a physical one-on-one meeting, or at least a virtual meeting where you can see a human being on the other side. And that fundamental right has, in my view, been the core cause of most of the writ petitions in the High Court. So I think the message to the revenue is listen to the industry, factor in the whole basis of trust and faith works as a two-way process. And second, even I think there is an opportunity today for the lawmakers to intervene such that they take away the stink that the faceless assessment has brought as a result of writ petitions in the high courts.
People, do you want to supplement anything on the faceless assessments, your own experience, your clients' pain areas? People? Okay, we'll.
Oh, sorry. Sorry. The audio went out at my end. Sorry. Yeah. Faceless assessment has been, I entirely agree with Mukesh. In India, we ultimately do the right thing after eliminating all the wrong. And probably faceless assessment as a concept is, desirable, but the implementation leaves a lot to be desired. We have had several horror stories of, the orders or draft orders getting predated to the hearing date, virtual hearing date, all kinds of, arbitrary actions are being taken. I guess part of the pressure is that they got to complete the, assessments by a certain date. 30th September, which was yesterday, was, everyone tried to meet that. And in the process, I think that taxpayers have really, really taken the brunt. So not a good story, but yet I would think that faceless assessment is something which is desirable if implemented well.
Mukesh, before you sign off from here, we would like to take your thoughts on the Pillar 1 and the Pillar 2, proposals. What should India look for? India has already voiced its support on both Pillar 1 and Pillar 2, and in fact has been at the front of all of these. What is India doing right, and what India should look forward to do on this?
See, I think let's look at the positive elements of India's policy stance. I mean, clearly, India is not just committed to multilateralism. It is now seen as being highly committed to multilateralism by way of actively supporting the two-pillar solutions. Clearly, the role and the ability to influence has also been enhanced as a result of the G20 and now the G24. I think one of the positive aspects of the acceptance of two-pillar solution has been, in my view, subjecting ourselves to a binding panel which will make the determination in case there is a friction on allocation of market related rights. Uh, Tax administration may refuse to acknowledge this, but I personally feel it's a first step towards some form of mandatory arbitration or arbitration, if not a mandatory arbitration. Those are clearly the positive aspects of it. Having said that, I think the journey to some sort of a solution on the two pillar is long in my view. So just a case in point is uh, what should be the rate of the residual profits? If you look at the G7 communique, they talked about the 15% figure. Within 2 weeks, you had the OECD releasing a 15 to 20% range, ostensibly because of pressure that came from the market economies. And now you have the G24 stepping in with a very, very strong statement, which in my view is suggestive of the degree of friction that lies ahead of us insofar as the two pillar solution is concerned. And I would like to point out three aspects over here. Number one, the G24 is talking about a residual profit of 30%. Now, bear in mind, India has a very important say in it, and this is a very important point of friction because from where the G7 left to where the OECD talked about 20%, now India is pushing for 30%. And when I say India, means India as a part of the G24. The second is, in my view, which is an even more bigger area of friction, is the statement of G24, which talks about gradual removal of unilateral levies. It uses the word gradual and progressive. Well, there are two ways to look at it. One, are we backtracking? Two, are we trying to say that until the time the two pillar solution settles down, given a 2023 implementation, we will still have equalization levy continue. And by the way, this is not just India's stance, this is the G24 stance. So that, in my view, is a very, very bigger cause of concern and friction. The third is also a potentially bigger cause of concern is the increased scope under subject to tax rules. Now, this is again going on to the pillar two part of the two pillar solution. But I think if I look at the G24 recent communication, I see many areas of friction. I think that no solution is going to fit everyone. It's easy said than done, but I think it's important for keeping in mind the spirit of the inclusive framework and an important role that India has played, that there should be some give and take and move ahead, because it would not be very productive for businesses to either live with this uncertainty at a general level, or for that matter, to live with a solution where unilateral levies are going to be removed gradually and not immediately after the implementation of the two pillar solution.
Okay, wonderful, wonderful. Mukesh, I'm
Bala,
mindful of your time. I think
Bala, with your permission,
we'll
can
let
I
you
leave?
go, sir.
Yes,
We'll let
yes,
you go.
Mukesh.
Thank you so much for your time here and useful insights. We'll continue with Vipul and PVS on the rest of our discussion. Thank you, Mukesh.
All right,
PVS,
Thank
on remaining on pillar one and pillar two, what are your some of your thoughts on these proposals and what India is trying to do?
India has conceived equalization levy with a long haul in mind. I think equalization levy is a pressure which will be put on the international community to come with a solution sooner than later. But obviously the allocation of profits as per all these norms which are being evolved, it is going to elude all of us for quite some time. So I do not think the deadline of 23 or 24 certainly is going to be met. It's going to be quite difficult to meet that deadline. Equalization levy basket will keep on continuing, enlarging, because technologies will change and you will be able to keep on tweaking the amount of levy which is required. Unilateral levies will become the norm of the world in a way. And after some time, you may so find it that the businesses have got adjusted to the equalization levy as a measure of payment of tax. And you would have got it tweaked into the business model and then practiced it so much that you may find that pillar 1 or pillar 2 may even be outdated by the time it's announced. So I would personally think that this very long conversation on a global agreement on how to allocate profits interstate between companies is going to be a very difficult one. It does not happen. Only two global events we can see as the VAT implementation across Europe, you can say is a good consensus which was arrived at possibly after 7-8 years of consultation on that. So the next one, which I will say, even within India, the GST model is a long consultation, but nevertheless is occurred. For a global community to agree on a framework of how to tax it is not going to be easy. That means some amount of compromises will have to be made by all the countries in there. I would think that equalization levy is there to live, and we have to practice equalization levy with a greater regard and understand how to build it into the cost models of business.
PV has, in fact, Dr. Shom in his PPT has, he talked about $150 billion of revenue being raised on these, pillar 1, pillar 2. Somewhere I feel that, from an India perspective, since we are a net exporter of, services, probably this unilateral levy would make sense because, when we have a pillar 1 and pillar 2, when we are a net exporter, probably the higher tax rate in the other countries would come back to us as a foreign tax credit. So instead of giving up our right on tax on those, probably an equalization levy would be a good model to look at. So what are your thoughts on
Absolutely,
that?
Bala. And I think for us to shift from a services economy to a manufacturing economy, while there's an attempt and the policy directions are towards that, but still services will continue to constitute a larger part of our export, if I can put it. So I think the very fact that India is enthused about pillar 1 and pillar 2 is actually should be worrying them rather than giving them comfort, because you may tend to lose more than what you are trying to gain. So to factor the export of IT services and to be fair, I think we'll be very more dominant force in the IT sector, in the what's called the technology exports will become more and more dominant, and government possibly has not factored what it may lose in the bargain arising of that. So I would think that the longer the equalization levy continues, it may be good, certainly from Indian economy, at least from an exporter's angle. I think I would support it that equalization levy is a better levy compared to pillar 1, pillar 2 kind of mechanism.
Vipul, just going back to our discussions on the government's response during COVID, etc. In fact, Dr. Shom and Justice Ishwar in their opening remarks also pointed out that India did not, deal with certain issues on residency, right? Because people were stranded in India, etc. India did not come out with as open clarifications on this matter as other countries did. So, what are your thoughts, and how would this pan out, and what is that you are advising your clients who come to you on this?
Yeah, that's true, and that's unfortunate that India has not come up with any clear guidance on the PE exposures or OM exposures on account of forced stay because of COVID. So really, where such a situation does arise, and if the client is has a benefit of the treaty with India, then I think one of the options that is available is to apply the tiebreaker test and see whether really which is the real residency. And for that, of course, MAP will have to be invoked. So it is not a desirable procedure. It can be a very involved and extended, apart from it being expensive procedure. But I guess that is something that would really have to be played out. But I do hope that given the way the government has been, let's say, benevolent in the recent months, they will not really go out and do as aggressive assessments and positions as we are used to. But of course, one can never say what will happen. But we can only hope that wiser counsel will prevail, and the option of litigation in the courts or through a map-like procedure is avoided. Because otherwise, India's drive to make, India rank higher in ease of doing business will only go down. And that is really contrary to the stated policy and the work that the government has been doing in that regard to make India an attractive jurisdiction to invest.
No, in fact, that's going to be one of my next question to you, Vipul, since you touched upon ease of doing business, right? So we looked at various measures, pre-COVID, which like reduction of rate, etc., etc. But do you really think that businesses do feel comfortable to relocate to India? While we have seen a lot of unicorns, a lot of listing happening, but do you still feel that the ease of doing business has improved on the ground, apart from the rating itself has gone down in terms of the world ranking? We have gone up the chart, I would say.
Well, honestly, it's very difficult to generalize whether there is ease of doing business. There are yet many frustrations which are there, but at the same time, there are positive actions at many occasions that the government has also reacted to problems. Ideally, yes, we would like government to be proactive and make it easy universally for anyone to invest in India. But I think that we are stumbling and learning repeatedly. So that really continues, and I half suspect that it's not going to go away anytime soon. But I think the direction that we will keep becoming better and better at doing business in India remains. One of the things that give us that confidence is that our FDI investments, including various schemes like the PLI scheme, etc., which government has been introducing, there has been good traction from overseas businesses, and that gives us that confidence that they do want to come to India and do business, notwithstanding these challenges, but with the belief and conviction that the government is well-meaning to listen to them, and therefore I think on the whole, I would like to believe, and I am seeing that on the ground, that investments are coming, and people are continuing to want to invest more. In fact, FDIs, even if we can exclude the portfolio investments that come in, are touching all-time high in the last couple of years. So I think that is a good story.
Wonderful. Thank you, Vipul. PV is in fact taking a leaf out of what Vipul mentioned on the FDI, etc. And we are also seeing a lot of M&A activity, right? And in fact, the government itself is a large seller. We saw the news that Tata Sons has been selected for Air India. And there is a backdrop on the tax side of that, right? Because there were amendments which were made to make some of these disinvestments of the government more attractive, because the losses should carry forward. Otherwise, there's no one who is going to bid for these businesses. But on the private sector side, there is still a lot of resistance on laws being allowed to be carried forward, etc. One alternative, as you have been advocating, is on the consolidated tax return. So, is this the right time to look at consolidated tax return? It's a very acceptable practice, in most developed economies. So where are we on that, PVS?
I think the government is putting a needless resistance to a very important reform, I would say. Indian companies are becoming global companies. There are companies are getting organized into multiple incorporated entities. Groups are getting only for business and strategic reasons. Doesn't mean that the tax assessments have to be as many as the number of companies. It is very important to have a consolidated tax regime for a country which is emerging to be a global dominant player. US did it. US possibly has become, the US corporations have become global corporations, possibly aided by the consolidated tax regime. But for that, US also would have found the same difficulty. If you want your corporations to become global corporations, you must have some kind of a consolidated tax regime which should work. So I think the government is trying to ease out the PSUs, protecting their losses. It need not be through so many changes of law, amending each section and other things. You allow a simple consolidation, and possibly many things will get protected automatically. It also will prevent many of the laws which you have put in place. You don't need such vast transfer pricing regime to identify your pillar 1, pillar 2 may become important for other countries for your MNCs, but for yourself it is not any more important because you are going to tax the global profits in any way. Your poem becomes irrelevant because your place of incorporation, if you have a global consolidated regime, it will become altogether irrelevant for you. I would think that the government will be very practical and cost of administration. Now you are saying faceless assessment. Faceless assessment for a large corporation, you will take a Reliance or a Wipro or a large company. Easily you can count 50, 60 companies within the group incorporated in India. Now you want to do 60 assessments or you want to do one assessment on a risk which is common to the group. I think the risk weighting for the group will be the same as the risk weighting for each of the companies which you are trying to do. I would possibly the government will do very well by putting a consolidated tax regime in place. And also, if it is a global consolidated practice, well and good. It will be very unique. Not many countries have practiced it. US did very clever things with the global consolidation by check the box kind of a mechanism and allowing some kind of a global consolidation. We can also try many of those issues if we can do it. I am a strong advocate of consolidated tax regime because you want to tax economic profits and you don't want to tax each entity for the profits they earn. I think the group profits are more important than individual profits. And dividend regime, anyway, you have to incorporate ATM and so many other sections for intercorporate movements of money. You don't need so much of struggle. You can simplify the law by having one consolidated.
I agree. I agree. In fact, taking off on that, PVS, while we looked at from an India perspective, but if you look at the foreign countries like US, Switzerland,
Bala, I just want to remind
Canada.
you. Bala, I just want to remind you on the timelines, Bala.
Yeah, just two more minutes, Shekhar, we'll conclude. So in fact, I've come to almost my end of
No,
my
sorry. I just
conversation.
wanted to be a timekeeper. That's it, Bala. Sorry about it.
Absolutely. PVS on the global side, and PVS and Vipul, both of you, on the global side, there still is a federal and provincial or a state level kind of tax. India, thankfully, on the income tax side, at least, we are one unified regime. On the GST side, we have come together. On the federal federation basis. So the country should, while they are implementing global minimum tax, should they also not look at a unified income tax regime within their country in terms of one single income tax methodology?
I will first allow my co-panelist to take that question. He will be able to bring better insights. I will certainly may have a comment in case I want to add one.
I'm sorry, Bala. I had a bad audio, so I couldn't quite catch the question.
The point is,
so I apologize, but perhaps I'll
US
pick up
side,
if PVS can respond. I'll pick up what was the question.
Bala,
I beg your pardon.
the trade-off
Just to save
between
time.
the federal tax versus provincial tax, if I have to say, a combination of that both, is that the federal tax gives you ease of compliance, ease of doing business. Many factors are getting aided because you have one authority exercising. So it scores well on the ease of doing business. And allocation of this revenues is through the government policy of how to have interstate relationship and so on and so forth. It works well. But real economic driver will be when the taxation powers are given to the states and not to the federal, because each state will compete with each other to attract business and promote business. So while we are very comfortable thinking the central government is better than state government in our domain for many years, maybe actually state governments can also do a good job of assessing tax profits, provided the profits are allowed to be taxed by states in a independent way. But even in the US, when we say it's a state tax, it actually picks up the federal tax amount and then computes a different, slightly tweaking the amount of taxes. Real taxation power of a state is to find out profits of a state and tax it itself. There you will find competitiveness among the state, differentiating each state and developing the. So if I have to say ease of doing business, federal tax is good. Doing business itself being encouraged, state taxes will do.
Wonderful, wonderful. Thank you, PVS. Vipul, there's one question from the participant.
I think
We'll close.
People wants to respond what PVS said, and then he wants to do that, Bala. That's what I understand.
Yeah.
From. Go ahead, Vipul. You want to respond what PVS said, Vipul?
Oh, okay. So, frankly, yes, it is idealistic, but, I would believe that Indian, taxpayer as also the tax administration has yet to reach that maturity stage to bring in this state tax concept to bring competitiveness. I would think that it will make our lives more miserable in the intervening period, and we really need to first stabilize on this, which may take maybe a couple of generations more, I would think. So, idea is good, but timing we have to wait.
Okay. Vipul, before we sign off, there's a question from one of the participants. He's asking a question as to the global minimum rate of 15%, whether it is the effective tax rate for the company or is it the gross rate? I think by the gross rate, I understand it should be the country rate, right? The headline rate.
No, my understanding is it is not the headline rate, but it is the effective tax rate.
Correct.
So therefore, the headline, even if it is a higher rate, but because of various incentives, if it goes below the 15% rate, then the difference would have to be made good.
Yeah. Thank you. Shekhar, we have come to the conclusion of this discussion, and thanks to my panelists, Vipul, PVS, and Mukesh, in his absence. But we had a wonderful discussion. We could cover only so much in this 1 hour. But these topics are going to be debated over the course of today's conference and also tomorrow's sessions. But I think we left certain seeds of thoughts in the minds of our participants to mull over it and also take away from this. Thank you, Vipul. Thank you, PVS. Thanks, Mukesh, and thanks, Shekhar, for the opportunity.
Thanks Bala. Thanks a lot, Bala. Thank you, PVS, and thanks, Vipul. Participants, most of you know Bala and PVS, so you can put your questions to Bala and Vipul. For Vipul, you can send the questions to me. I'll forward it to Vipul on your behalf because he's my partner only, so you don't have to bother about Vipul's email ID. So if you have anything to ask, you just send it to me. I'll send it to Vipul. Thank you so much to all the panelists, and thanks, Bala, for taking the discussion. Our next session is led by Tapati Ghosh, my good friend, and on the Indian Social Security Agreement. That's a very, very important aspect that is coming up now. We have seen double taxation avoidance agreements. We have seen multiple issues in DTA. That issues on social security agreements, particularly when the movement of people is on very high and the service economy is picking up. So Tapati Ghosh is my partner. She is also co-chair of the Direct Tax Expert Committee. And Tapati Ghosh has got amazing panelists from the government side as from the industry side. Over to you, Tapati, for taking this forward. Thank you, Tapati, for taking this. Tapati, you are on mute.
Sorry. May I request my panelists to put their videos on button, please? Thanks, Gagan, Veena, Shri Uttam Prakash ji. I can see Shri Jha. Thank you, Mr. Jha, for joining. I'm not sure why Mr. Uttam Prakash is not there yet. I mean, I know he's joined, but I think he's not being made presenter. Rupa, can you make him a presenter, please? Hello. Rupa, if I could request you, he can. He's in the session.
Tapati, I think he has got some internet issues, I think.
No, he's in the session. He can see all of us, but he's not been able to switch on his video or.
Okay, but
mute.
under what name has he logged in? His name is not visible here, Tapati.
I think it's with Zara Prakash. Can you check that?
Zara Prakash. I saw that. Let me just see that. I think he is logged off. Tapti, will you give me his number? I'll coordinate with him. You start, Tapti. You text me his number, Tapti.
Yeah, sure. Saraswati, if you could. Thank you.
You text me his number. I'll coordinate with him.
While Sri Uttam Prakash ji joins in, maybe a quick introduction on the session. One may think, why do we have a social security agreement session in an international tax conference? Many countries overseas treat social security tax as just another form of tax on income. For instance, NIC in the UK, in addition to regular taxation, is managed and collected by the HMRC. What SSA is to social security tax, double taxation avoidance agreements are to income tax. So we have included this session as part of our international tax session on tax policy in this new normal world. The year 2009 was eventful with respect to social security agreements, as the social security agreements of Belgium and the limited Germany agreement entered into force. We've come a long way since then. India has signed agreements with 19 countries now that have become effective, including several in the EU region. One agreement has been concluded with Brazil, but has not yet been made effective and not on the EPFO portal as operating SSAs. But there's a lot more that needs to be done. And the team here on this call and the organizations and the industries that they represent have been and are continuing to be leading from the front in getting those SSAs in shape. Suffice to say, these involve government representatives, the MEA, the EPFO, and governments of the partner countries. And you can imagine that these negotiations can never be easy. We hope to bring you in this one how things are shaping up in policy and in the implementation stage, and the strides that we've taken and what's in store for us. I'll spend a few moments on the background of why social security agreements are required in the first place. With globalization and increased inbound and outbound investments, cross-border labor mobility is just our new way of life. And with it comes a lot of complexities, social security issues just being one of them. In a way, these social security legislations across different countries could become an impediment on global mobility in the absence of social security agreements. And to understand it better, it would be relevant to consider the mandatory social security costs country by country. And I'm going to take two examples. The US, for instance, the social security legislations provide that any employee exercising employment in the US have to be covered by mandatory social security contributions. These include the old age survivor disability insurance, which requires a contribution of 6.2%, both from the employee and the employer, and there is a cap to be maintained there. Medicare health is charged both again to the employer and the employee at 1.45%, but without a cap. There's the federal unemployment insurance at 6% of wages, again without any cap. The state unemployment insurances, again, which are mandatory, vary from state to state in the US and can become very, very cumbersome. France is another example where the mandatory social security costs are really significant. The social insurance covers maternity, disability, death, retirement, family allowances, housing benefits, and the total cost for an employer on social security could be as high as 40% plus of the wages. And in most cases, the mobile employee will not ultimately be able to avail of the benefits under the social security regime of that country. The main reason being that the employees do not meet the minimum contribution period that are required in those countries. For example, in the US, that's 10 years. And when an Indian employee is deputed to these countries for about 3 to 5 years, they would generally, the contributions are not going to be refundable, nor do they fetch any kind of benefits or returns to these individuals. Over and above that, the employees that are deputed overseas are contributing to the home social security, provident fund principally, and hence would not want to bear the cost for the overseas social security. And hence, the cost has to be picked up by the employer, which becomes an added cost in all of their projects and becomes very uncompetitive in the global arena. So the concern, therefore, is how are these costs going to be reduced? And the answer lies in these bilateral social security agreements, which provide a relief from being doubly impacted in similar by similar legislations in various countries. The nature of relief, just like in the case of a double taxation avoidance agreement, can differ from agreement to agreement and hence would vary and would need to be seen in a very strict manner. So without much ado, may I introduce you to our esteemed panelists today. First and foremost, Sri Uttam Prakash Ji. He is a Regional Provident Fund Commissioner heading the International Workers Division of the EPFO. He's been in public service since June 1999. He's formerly been the Fair Competition Advisor to the Islamic Republic of Afghanistan, where he served for about 3 years. During his tenure till now in the EPFO, he's led EPFO programs in diverse areas, which include compliance, policy, implementation, information and technology, public relations, and capacity development. In his last role as RPFC Delhi West, Mr. Uttam has established one of the strongest offices and largest offices of the EPFO, built on a strong and collaborative team that worked non-stop for 200 days, processing 100% of the COVID social security claims within 24 hours to tide over the financial crisis during the pandemic. Kudos to that, really. Extremely knowledgeable and educated, Mr. Uttam did his master's from Delhi School of Economics, master in public policy from Lee Kuan Yew School of Public Policy, National University of Singapore, holds a postgraduate diploma in social security from the Institute of Social Studies, Netherlands. He is currently pursuing MBA Digital Governance from IIM Vizag. He's passionate about policy and governance issues, and his articles have appeared in dailies in India and Afghanistan. We also have Shri S.K. Jha on this call in our panel today. On our special request, he's the predecessor to Shri Uttam Ji. He's been the EPFO of the International Workers Ward Division for a long time. We thank you so much for being a part of this panel at very, very short notice, sir. To go to our next panelist, Veena Chilappa. She's a qualified cost accountant and holds the postgraduate diploma in finance from XLRI Jamshedpur. She's got 20 plus years of post-qualification experience in banking, retail, and ITES industries. overseas and in India as a finance manager and controller. She's been heading the global payroll function at Infosys Limited for the past several years now. And in this role, she's been responsible for employee payouts, tax and regulatory compliance for 260,000 employees spanning 50 plus countries across the globe. We cannot have had a more worthy representative from the industry from an operational perspective on this panel, given her wide experience. Last but not the least, Gagan Sabharwal. He's a senior director of NASSCOM, leads the International Trade Policy Initiative, and is the head of strategic market initiatives for the industry. He's been instrumental in bringing both Japan, EU, and India closer by launching various initiatives, not just involving policy framework, example, work visas, totalization treaties, raising key policy challenges, but also launching key initiatives such as the Japan VC Connect initiative for meeting Indian startups. He's a regular at governmental meetings on WTO, GATS, FTA, B20, DTAA, totalization, and many other bilateral, multilateral agreements, often considered as an advisor to the government on these files. He manages relationships with various international governments and agencies to strengthen economic partnership with India's leading trading partners. I have personally been connected with Gagan for more than a decade now, ever since the first few SSAs were put in place, and he's been instrumental in getting us, the MEA, the EPFO, and many of the industry stalwarts and members together to brainstorm on how SSAs can be made much more effective. And with that, if I may draw on Sri Uttam Prakashji for his first round of discussion on the status of SSAs that we have at this point in time and what they entail for us and the industry, sir. If I may hand it over to you. Rupa, if you can start the presentation, please.
Okay, thank you so much, Saraswati ji, and I hope slightly because of some technical glitch, I don't know, I was not visible then. Possibly I'm visible now.
Yes, you are, sir. Thank you.
Okay, and thank you, Jha Saab, for agreeing to be a part of this deliberations. I much appreciate you have taken out time. I know you had a hectic day today in the ministry, as well as another meeting which you just ended half an hour back. So it is my gratitude and thankfulness. And as you know, Saraswati ji, I mean, we believe in a new style of working, possibly new in the government also. So here is a team EPFO in front of you, and we will all together try to see how best we can enrich ourselves on either the sides to understand this issue. So if with your permission, if you agree, one of my team members, Mr. Samir, would like to present this on behalf of me right away. He is there with me, and we will go ahead with him with your permission, and then I can chip in after this formal presentation is completed. So I'll bring in Samir.
Absolutely, sir.
Yeah, Samir, please come.
Very good evening to you all. My name is Samir Kumar. I am in the International Workers Unit of EPFO. I am working under Uttam sir. And today evening, I am bestowed with an opportunity to share with you all few details about social security for international workers in India. So shall we start with the presentation?
Sure. Rupa, if you can go to the next slide.
Not.
Rupa, if you could go to the next slide. Thank you.
Well, if we all know that the provisions for international workers in Indian legislations were introduced in the year 2008. If we go prior to 2008, Indian migrant workers who were going to work abroad were to mandatorily contribute to the social security system of the host country. And ironically, for this contribution that was to be made by them, there was no benefit in return that was given to them. For many countries, put a restriction of number of years of service which has to be rendered in order to avail any social security benefit. Along with this, the service period that was rendered by the migrant workers in the host countries was also lost, as it was not counted in the home country. Further, the benefits, if availed by any international workers in the host country, were not allowed to be exported back to his home countries always. So, grappling with these problems, the government of India decided to initiate talks on social security agreements and sign such agreements with various countries across the world. Can we go to the next slide, please? Now we come to what is a social security agreement. A social security agreement is an international agreement that coordinates social security scheme of the two countries contracting parties to ensure continuity of social security coverage to the migrant workers. These agreements also allows avoidance of double taxation on the migrant workers on account of social security. The next slide. Coming to the benefits under social security agreements. Now, how these social security agreements cater to the need of migrant workers and how they enable them to dodge over the barriers which were present earlier. The first benefit under the social security agreements is detachment. If I have to search for an analogy in the taxation world, I will equate detachment with double taxation avoidance. Migrant workers, when they are posted to the host country, and if they continue to pay social security contribution in the home country, they are not required to again pay the contribution in the host country. So a worker is required to pay social security contribution only in one of the countries, either the host or the home country, when in the event when an agreement exists between the two countries. The other benefit under social security agreement is totalization. As we saw earlier, the service period rendered by a worker was lost. After an SSA coming into force, the service period rendered by a migrant worker in both the host and the home country is totalized, it is cumulated, and the eligibility of that worker for pension is then decided. If I have to give an example, I would say that in India, the minimum years of service required for pension is 10 years under EPFO. Now, if a person has 5 years of service, contributory service under EPFO, and the same person has rendered another 5 years of service in any other country having agreement with India, then his 5 years of service in that SSA country and 5 years of service in India can be added together to make that person eligible for pension in India. Conversely, if that person wishes to, for example, we have an agreement with Canada. Canada also has minimum of 10 years of service requirement for pension. If a person has 5 years of service in Canada and is ineligible for pension there, he can get his service in India added to the Canadian service to make him eligible for pension there. The third benefit under Social Security agreements is portability. Portability stands for bringing back the benefits home. A person under this benefit can avail the pension or other financial benefits under the Social Security schemes in his bank account in his home country or any other country of his choice where he desires to reside after retirement. Can we move to the next slide, please? On your screen is the technical definition of international worker as it exists in Indian statutes. For the sake of convenience, I categorize international workers into two categories. First, inbound international workers, that is the foreigners who are coming to work in India. And second, outbound international workers, that is Indians who are going to work in countries having agreement with India. So inbound international workers are those who hold other than Indian passport. So any foreign national working in India is an international worker, if he works in an establishment which is covered under EPF Act, then the establishment has to pay mandatory social security contribution for that foreigner working in India. Outbound international workers, Indians who are going to work in SSA countries. Now there is a catch, a variance from layman's understanding. Not every Indian going and working abroad is seen as international worker by us, by the law. Only international worker, only Indians who are going to work in a country having agreement with India and having contributed there in the social security scheme are international workers for EPFO. Can we move to the next slide, please? EPFO is the competent institution in India to implement the social security agreements signed by Government of India. As the competent institution, EPFO implements these agreements signed by India. In its role as implementing agency, EPFO acts as an interface between the SSA country and the Indian workers. We maintain perpetual liaison with our counterpart agencies in the SSA countries to assist Indians to get benefits, social security benefits, which they have earned in the SSA country. We also provide the benefits which we have already discussed in the SSAs. Apart from that, we do provide administrative assistance to our counterpart agencies in SSA countries. Can we move to the next slide, please? As on date, as we speak now, there are 3,16,000 approximately COCs total issued by EPFO till date. Out of that, 29,704 are active as on date. That is 29,000 Indian workers are working in SSA countries with COC issued by EPFO as we speak. This number was 54,000 2 years back, but COVID pandemic, and then this number has been reduced to nearly half. Can we move to the next slide, please? In the last financial year, EPFO settled 7,888 claims received from international workers, which amounted to a total of 117 crore rupees. Can we move to the next slide, please? These are the top 10 countries from which foreigners are coming and are enrolling themselves with EPFO. Rankings stay in flux. Few months back, it was USA on the top. Today, it is China. Can we move to the next slide, please? This is our journey. We started our journey in the year 2009 when our first social security agreement signed with Belgium entered into force. As on date, India has signed 20 social security agreements, the latest being with Brazil, which was signed on 25th of January 2020. But this agreement is likely to be in force very soon. All other agreements signed by India are already in force, and Indians are availing benefits under these agreements. Next slide, please. The agreements signed by India are categorized into two categories. First are the comprehensive agreements. Comprehensive agreements are those which provide for all the three benefits listed under an SSA, that is detachment, totalization, and portability. Two agreements signed by India with Switzerland and Netherlands are partial agreements which doesn't provide for the benefit of totalization. We are in the process of reviewing these agreements and trying to convert them into comprehensive ones. Can we move to the next slide, please? On your screen is the map of the world showing footprint of EPFO in the field of social security. In green, we can see the countries with which India has already signed a social security agreement. and in yellow are the countries with which we are negotiating social security agreements and are likely to have these agreements in force very soon. Can we move to the next slide, please? Next slide, ma'am. In the last 2 years, we have endeavored to improve our service delivery to our stakeholders. We tried to get rid of an image of a normal government office which runs on paper and tried to become an office which is available online to our stakeholders. In our attempts, we have made available online the monthly return that is to be filed by establishments having international workers. This return was introduced 3 years back. We are in the process of revamping this return, trying to reduce the number of informations that is called for by the establishment. And very soon we are expecting the revamped return to be in place. In order to pinpoint our compliance and avoid trouble to our stakeholders, we are now in coordination with FRRO, we are trying to give shape to a system-driven compliance in EPFO. Earlier, we have seen instances where some claims of international workers were getting rejected. In order to reduce such instances, we have introduced system of flagging of claims of international workers, where the dealing assistant in our offices, dealing hand in our offices now know that this claim pertains to an international worker, and extra care can be given to those claims to avoid any case of rejection of those claims. Earlier, sharing of data with our counterpart foreign agencies in the SSA countries was taking place physically on paper. We have moved on now, and the foreign agencies now have access to our international workers portal, and they can log in on the portal and access our data of certificates of coverage that is issued to our workers working in those countries. In last year, we introduced right now the COCs can be applied and received online through our international workers portal. Last year, we also introduced facility of extension, modification, and cancellation of COC online itself on our international workers portal. Till 2020 December, the process of issue of COC was partially on paper. That is, the application had to be printed, signed, and uploaded. Now, we have introduced e-signature in our COC software, and an establishment can approve a COC application through e-sign, and so can an EPFO office approve and upload an COC application through e-sign without any need of printing any paper. Can we move to the next slide, please? While we are doing this without the support, without the cooperation of our stakeholders, it is impossible to deliver on various expectations they have from us. In the process, we too expect something from the employers. There is a common confusion, very common confusion, regarding the status of overseas citizens of India as international workers. An overseas citizen of India holds a passport of a foreign country, and therefore, by law, as per our definition, they are international workers. So we expect an employer, while he is employing a worker, to check his passport and verify whether the worker is an Indian or an international worker. The facility to generate UN for an international worker as of now does not require Aadhaar, and UN for an international worker has to be generated in the very first month of his employment. We do expect the contribution to be on time and the IW1 monthly returns to be filed. The last expectation is in fact beneficial to all the stakeholders, including EPFO, the employees, and the international workers. The claim of an international worker can be settled in the month in which he is about to leave India. In this case, an employer can submit a separate ECR in the first week itself of the month when the international worker is about to leave. And then when the contribution is received by EPFO in the first week, the claim for that international workers can be filed. This way, we can provide their social security benefits before they leave our country. So this way will be improving the image of our country in the eyes of other countries of the world. Can we move to the next slide, please? Can we move to the next slide, please? Thank you so much. It was a pleasure talking to you all.
Thank you.
Thank you, madam, for allowing us to present this. Now, yeah, after this brief presentation, we will get into the discussion mode as you let us do.
Sure.
So now
Sure.
let's go forward with the agenda.
Sure. Thank you so much, sir. Gagan, if I may, turn to you for the next question. At a broad level, how do you believe the industry perceives social security agreements, and what are the significant moves? There's significant moves from India to, say, countries like the US and the UK. Do you see SSAs coming up for these countries in the near future?
Thank you, Tapati, and good evening to everyone. I know we're short on time, so I'll keep my interventions brief. I think, to answer your first question, I don't think, we give this as a deserved kind of attention that we all should. I think it's one of the very big policy wins for India, and not so spoken about file in particular. And, it needs a lot more deserved consideration and attention from all stakeholders, which we believe, over a period of time it will come. We know how it helps us. Why I say this is that, we've been involved since inception of this division, international workers. And Tapti, you would recall that, we used to have those meetings when, the first meetings were happening and the manual was being written for the very first time, which was to be put online by EPFO department. I still have, draft of that in my archives. So it's so heartening to see, now we have come across so many agreements, almost 20 by the latest count. The amount of savings that it brings to India and Indians in general is humongous. And I don't think we, talk about this much. Looking at the numbers today that EPFO presented, just back of the envelope calculation would suggest each year, and mind you, this is not during the COVID era, but in normal times, with the normal traffic going on about doing things, each year the total amount of savings that this project provides to India, or these treaties provide to Indians, is anywhere between $500 million to about $800 million, ballpark number. That's a huge amount of saving with just 20 agreements. And there are more than 180 countries in the world. So beneficiary numbers will run into hundreds and thousands. So it's a great initiative. We fully support it on behalf of the industry. We were the pioneers and the people instrumental in making sure that this sees the light of the day. And I think most of us from the IT industry would like to see the ambit of the coverage of social security agreements being increased to some of our major geographies, and which is a no-brainer: US, UK, China, Mexico, Italy. And those are the list of countries that we have where we would like to focus our attention on. And I must mention over here that we behind the scenes at NASSCOM have been working with MEA and Government of India, where we have full support, including from the Prime Minister's office. Most of you would have read the stories in the media about Prime Minister, discussing the H-1B issue as well as totalization issue with President Biden last week when the state summit happened. So it's work in progress. We remain hopeful, but yes, two of the largest economies that are the largest markets for Indian IT industry, the agreements still elude us. From existing agreements, where we have about 19 of them operational today, it's been a phenomenal journey, but what we have learned is that there are few leakages as well. As you outlined briefly, Tapti, in case of France, there's about 50% coverage, 50% is still leaking. Germany, about 70% is leaking. Sweden is 8%. Japan is about 10%. So And there are nuances to it. There are nuances to it. Given an opportunity, I think I'll have to bring in one more interplay of visas with the implementation of SSA treaty. So maybe when I get the second opportunity, I'll go into details of this one. But phenomenal experience over last decade or so, and we fully support the idea.
Thanks so much, Gagan. Veena, if I may turn to you now, from an operational perspective, how are corporates, viewing the implementation of the social security agreements? What kind of benefits have you do you see really, coming to you in a way in hard cash, in terms of savings? So, I mean, you're speaking for the entire ITES sector as a whole, I would say. You're on mute, Veena. And just by the way, you are your role over here is not only the user of these services, but also a stakeholder in shaping all of these policies, as we've discussed in the past.
Thank you, Tapati, and good evening, everybody. I think the social security agreements, we have come a long way from where the journey has begun in 2009. And, we have actually signed about 20 agreements as we stand. And it is a real boom to the industry, as we know that the cost involved and what we are speaking about is somewhere around, for a big IT firm, $100 billion saving per annum that we get from all the pillars of social security contribution that would have otherwise gone to the governments abroad, and with no return to the employee or to the employer. So it has been a big cost benefit that we are that we have gained with these implementations. However, the movement of the employees across the borders and with global mobility, it has not been an easy journey. It is like, it is from a regulatory point of view as well as from a cost-saving point of view, it has not been an easy journey. It's like, even though the SSAs were implemented way back in 2009, 2011, it took a long time for the industry to actually implement this, convincing the employees that this is beneficial to them and they need to sign the certificate of coverage. We had to take into account the structure, the salary structure that we work on, whether it is a net model or whether it is a gross model, and whether the deputation should be on a short-term to medium-term, and all of these structures had to be taken into account to implement this SSA agreement. So indeed, it has been a very very challenging and a very good journey, I would say, on these SSA implementations. So there are challenges around it, but nonetheless, it is worth the efforts.
Thank you so much, Veena. If I may turn to you, Mr. Jha or Mr. Uttam Prakash ji, on where do you see, you did call out just a little way back on what the employer needs to do to achieve a more seamless kind of assistance. But how do you see these social security agreements panning out from your perspective? Which are the countries should our members be looking out for as the next SSA? I know in the past, Gagan, in our conversations earlier, we know that Gagan, the EPFO, they've all been a part of the delegations to other countries like Germany to solve issues of the members, in the past. So where do you, if you can throw some insights on how you see the government moving towards more SSAs, all of the 4 pillars covered, and so on.
Thank you so much. And let me just put, this is a humongous question. It's not a simple question. Yes, but for sure, see, we have a new social security code already approved by the parliament, signed by the president, waiting to be implemented. One of the basic principles behind the social security code also is to bring social security to every worker in the country. So I would say there is nothing stopping us from aiming high for 180 countries, as Mr. Sagarwal said. What route we follow, how quickly we go is a joint effort. And it's not alone the governments will be able to do it. It would come from NASCOM, it will come from you, and most important, it will come from every international worker who desires and who, basically tells us, forces us that I want to have this right. So yes, let this be a joint effort, definitely. And as Mr. Sabarwal has also said, the commitment to social security is no less. Even on the first visit post-COVID, Mr. Manmohan Singh and our Foreign Secretary, Mr. Sringala, they have quoted, their statements are available in the media as well, saying that social security is important and we are looking for the money there of our own people in the United States, putting it to proper use and giving them their rightful due. And this is all a matter of small policy and understanding between two nations. So the idea is novel, and being a democratic country, say the largest, the United States, and same as we are almost, good citizens of a good democratic process. So we deserve that. The only thing is, how do we pursue it? So that is one thing. This is how we are thinking in the broader aims and vision kind of statement I'm saying. But yes, there are many things which we need to do as we go along. Like our service delivery, first of all, should be something which is aspired. EPFO has been doing somewhat decently well in the recent times, especially in the COVID times. If you see, forget about the international workers, which are also a part of our claim settlement processes, and some of the figures we have shown you in our PPT. Even otherwise, this year we had a workload of more than 50% as compared to the last financial year. And just compare it that we had the constraint of working with 50% staff only. So while the load increased, the number of hands to do it reduced. But still, we did internal many kind of readjustment, like we moved to multi-location claims, like not tying a claim in a particular office. Wherever the load was high, we moved it to a lower load office through the, of course, IT. So similarly for international workers, what we feel is, since we have very young, as you say, 2008, 2009, not very old that way. So there are many processes we need to place. We need to put in technology to the best of utility, where it should be the world's best. And when we, NASCOM, you will be able to say, when we are developing softwares for others, why should we settle down for something low? So the government is committed, but of course, again, as you know, sometimes we are blamed of taking late decisions, delayed decisions. But one of the reasons is we think too much, and maybe there are certain processes which we have put in place so that we do not go completely wrong, because the trust of the citizens is with us. So, but jointly, yes, we have put in some more things, like now we have given a dashboard now, internal dashboard for our own field offices, to see whether these claims are being processed efficiently or not. We have made COCs online, most of the things. There are small issues are there. We are trying to fix it, and we have also formed an internal working group kind of committee, where we have put in stakeholders also, where we almost on a monthly basis will discuss those things also. So in any case, now we are at 19. Brazil possibly will be done soon, and the others in the offing. Once we reach a decent figure of say 50, and this we have to promise all together. I cannot say 2021 or 2022. We all will decide. 2022 means 2022, and we have a responsive government. They will listen. So that is what I will say and end it here. If I have answered your question, not very specifically, but yes, this is what the government is thinking on a broader
You definitely, sir. There's definitely enhanced employee experience. Automation has really gone up. We do see online COC applications and so on. Definitely a lot of improvements. So, if Mr. Jha, if we could have a couple of comments from you also, sir.
Good evening, all of you. It was very interesting listening to your discussions going on the issues. I have been a witness to the progress being made in last 2 years, and especially during the COVID times. And as Uttam already outlined, we have tried our best to provide the maximum IT propelled facilities for the international workers as well as the establishments as stakeholders. Of course, we have a long way to go, and as just what Uttam Prakash has mentioned, I will just try to add on to it that we have also provided a dashboard to the offices to look into the style and the type of compliance being reported by the establishments. So that at that point of time itself, if they do notice some discrepancy, they can advise the establishments at their end, and the establishments can also approach those offices. So what happens is that any wrong compliance being made or any compliance which is away from the accepted norms are located as early as possible, and then they are taken care of and rectified as early as possible, so that the ultimate goal of ours, that is the people who, when they are leaving or when they want their withdrawals or services, that is not hampered adversely and putting our image and our repute to question. So this is what I wanted to add to what Mr. Uttam Prakash has already deliberated. And I feel we definitely require your continuous support from all the stakeholders, and we will try to prove us to our task. Thank you.
Thank you. On that very positive note, sir, Gagan, if I may turn it back to you. You drew a short reference about what more is happening as far as government negotiations are concerned, and how there's this interplay between visas and immigration, social security, FTAs, and so on. Can you throw some light on how governments are looking at all of this and India perspective to it? I know we don't have too much time, but it would really help our members to see the larger picture.
I'll make it real quick, Tapati. I think on the improvement side of it, I think there are 3 areas where we would like to focus upon. One is about plugging in these leakages, as I mentioned to this topic earlier. So the interplay, what we've observed is what during the administrative approval or administrative procedures that happens post signing of the agreement between EPFO and their counterpart in the host geography, we tend to overlook what type of visa categories will be stamped on the passport. So in case of Europe, there's blue card, there's ICT visa, and there's domestic work permit. Depending on what is stamped on one's passport, the implementation experience of SSA and the deductions thereof will be totally different. So we need to probably learning from our past experiences. I think we should be a little more careful and ask more questions on our host counterparts on which visa will draw what sort of deduction, so that we can call that out in open, and companies can take an appropriate decision once they have that information in hand. The other point is, in case of Europe especially, we are facing problem, I think we reported by industry, which is about multi-country COCs. So this has now become possible because we now have a Schengen-like work permit, which we engineered with the European Parliament, which is known as Intra-Corporate Transfer Directive visa. So if you're given a visa, let's say with primary location of Germany, you are allowed to go and work for short duration in Belgium or Austria, which is a drivable distance for short duration. But the problem is, when somebody goes over there, they carry a COC which is issued by EPFO for Germany and not for Belgium or for Austria. So even though we may have a treaty with them, but because the person is not carrying the COC for that country, then it becomes a problem for them to get the exemption, and they are being made to pay in those countries. So we'll have to think this through very carefully. How do we engineer this addition of country on COC? Because even on the industry side, it's difficult to anticipate and give this out in preempting the demand that this may be the secondary location which we would like to add on the COC. That's point number 2. The third is, we've seen now, in case of domestic work permit, again in case of Europe, which are now coming up for renewals, we've seen that some of the German authorities are not honoring the existing CSCs, and they're asking companies and employers to get a new one. And I must mention over here that the response and the receptivity from EPFO has been great. Every company has been saying that. All of colleagues of Mr. Prakash and Mr. Jha has been really helpful, and they're trying to help them out. But I think we should anticipate this earlier, preempt this kind of problem, and put it in the administrative procedures file, so that we have ample amount of clarity. Given in a situation, this is how, these are the steps that you need to take. But to make the matters simple, we at NASSCOM will be institutionalizing a detailed report on all of these points, along with the recommendations and suggestions, which will be then submitted to MEA and EPFO, so that we can improve upon our past experiences and plug in these details.
Thanks so much, Gagan. And on that one point, maybe just a minute on that, on the interplay between FTAs and work permits and immigration and so on, and how the negotiation with SSAs also happen.
Well, it's a complicated one. I guess one case example is that we have is Singapore. Singapore totalization agreement never happened, but it was mentioned in the SECA, which was signed decades ago, and we always were struggling. The Singaporeans were struggling here in India. Indians were struggling in Singapore. We were getting exemptions, but somehow portability, some companies were having some problems. So there was this a deliberation between Commerce and MEA that we were party to, that does it make sense? That was the, I guess, first experience we had, and it was not a very smooth experience. So we've now requested GOI, Government of India, to not go ahead and talk about totalization being included under the FTA. FTA is a separate policy tool, and totalization is a separate policy tool. They should be handled differently. Otherwise, it only creates more complexities and problems for all the people who have to observe and go through the procedures.
Thanks so much, Gagan. Quick segue, Veena, to from a comment that Gagan made in terms of multi-country COCs. Today,
a time reminder to you, 6:45.
I'll just take 1 minute. Just. Currently the system is not in place, right? Because the system does not allow you to have 2 COCs at the same time. Until and unless one is cancelled, you cannot apply for the second one. So how do you really manage that? Maybe very, very quickly, because that's something that you're facing day in, day out.
So, Tapati, that's really a challenge. We have to cancel the COCs that is in place, and it is effective, and then we have to reapply for the COCs again. And that is the challenge that the industry is facing in terms of these, only one trip is allowed to be kept open. That is there. That challenge remains.
Thank you. I know we are really short on time, and I'm getting reminders from Shekhar to wrap it up. So thank you so much, Uttam Prakash ji, Mr. Jha, Gagan, Veena, for joining us on the panel today. A request to all of you, and while we've been discussing with all of our members and gathering questions related to challenges of be it operational or otherwise, he's kindly consented that if we send across our questions over to him by email, there will be a response. So please do send those questions across, and we'll collate it and send it across to thing. Suffice to say, I mean, really an enlightening kind of a session, gives a view of what the department is doing to make our lives easier, improve our ease of business in India. And of course, what's to come of comments from Gagan, comments from Uttamji and Mr. Jha. And thanks so much, Veena, for giving us the industry perspective as well. With that, sign off. Over to you, Shekhar.
Thank you.
Thanks, Tapati. Thanks, Mr. Jha. Thanks, Veena. Thanks, Mr.
Thank you.
And we are thank you so much, and we will be acknowledge you sincerely. Very thanks with all your efforts, what you have put in across, and Tapati and your team. Thank you so much, sir, for being here. We are keenly awaiting the next session by Mr. Mohandas Pai. I request Sunil to take it forward this session. Thank you, Mohan, for joining it, and always you have been a great supporter of BCIC, and all of the people who are speaking here, all the people who work with you, worked under you, so you always take pride in our growth. That much I know about Mohan. Thank you, Mohan, so much, Mohan, and over to you, Sunil.
Thank you.
Thank you, Shekhar. Good evening, everyone, ladies and gentlemen. Our next speaker needs no introduction. Personally, he's someone who I've, admired, all my life, has had a great influence on who I am today. And I've had the good fortune of working with him for several years, and I've learned a lot, both personally and professionally. So it is my honor and privilege to introduce Mr. T.V. Mohandas Pai. Mohan is a Padma Shri awardee and is currently the chairman of Manipal Global Education. He was a member of the board of Infosys from 2000 to 2011 and was the CFO of Infosys from 94 to 2006. Under his leadership, Infosys achieved many firsts. And just to quote a few, things like transparency and disclosure in the annual reports, early adoption accounting standards, introducing the ESOP program, the listing on NASDAQ, the list can go on and on. Mohan has been active in working with regulators to improve the business ecosystem. He was a member of the Kelkar committee constituted by the Ministry of Finance on reforming direct taxes. He served as a member of the board of SEBI from 2012 to 2016 and was also a member of the Empowered Committee for setting up the Tax Information Network of the Government of India. Mohan works with union government and many state governments in the field of education, IT, and business, and has done several philanthropic work amongst all that he can do. Sometimes I wonder how he manages, so much on his plate, and we all see him very often on the national television debates as well. So thank you, sir, for agreeing to be the keynote speaker on the topic of what should India do in the area of taxation and fiscal policy in the post-COVID era. I now invite Mohan to deliver the keynote address. Thank you, sir.
Sunil, thank you very much for that invitation. And Shekhar, thank you for inviting me. I'm very privileged and honored to be here among all the members who are here today to listen to us. I want to start by saying that what we need to do post-COVID in the taxation sphere, one has to look at the Pasati Shom report. The report is there, very exhaustive report, and the report says exactly what needs to be done. For the last few years, we have seen some kind of reforms, but they've been patchwork, and they have not addressed the core issues of how tax policy should be created in this country. In fact, I still remember Finance Minister Arun Jaitley telling us before 2014 that tax terrorism is one of the biggest threats to Indian business, and he will reduce tax terrorism. That there in the manifesto of the NDA government, but by 2019, when they finished the first term, tax disputes had doubled from 4.5 lakh crores to 9.5 lakh crores. And there's hardly any improvement because there was no attention paid to handling tax disputes. So what should we do in terms of tax policy? And then I'll come to fiscal policy. First of all, the most important thing to decide is who must set the taxation policy. Should the finance ministry set the taxation policy or the CBTD? Today, there's a tax policy unit, Shekhar. You know about this, that is in the CBTD. So CBTD, the tax collector sets his own policy and complicates the law and goes to the finance ministry and make sure they get what they want in most areas. The only person I've seen in the last maybe 30 years of watching and working with the government is Finance Minister Jaswant Singh, who put a halt to greater encroachment of citizens' power for the taxman, and Finance Minister Chidambaram, who made sure he read everything they sent to him, and they were really scared to send to him something that he would push back. So we have a situation today where there's a conflict of interest. So I would say that in future, the tax policy department should be with the finance ministry, and the finance ministry, using economic principles, as Dr. Shom says, should set the tax policy for this country based on certain principles of certainty, equity, etc., which we all are very aware. The second is we need to have a proper policy of tax assessments. Today, we are in a country where tax assessments are broken and the tax appeal system is broken. Now the tax assessing officer can do whatever he or she wants. They can convert a profit into a loss. They can write back anything, dissolve anything. There are no checks on their powers. And there are no consequences in case they reversed in appeal. So they have got unbridled power. And I was told that India is one of the few countries where the greatest power in the entire tax department is the lowest level, that is the assessing officer. And other countries do not give such powers. So we have to make sure that the assessing officer is held accountable for his assessment in case it is reversed in appeal or there's a gross abuse of power. I think that's one of the recommendations that was put into the Pasati Som Committee report also. And to give you an idea of the consequences of bad assessment, I'm sure all of you have obtained examples of bad assessments. I hope some of you will write books and give examples without giving the name of the company which suffered the consequences. So if you look at all these bad assessments, you are stuck for 15, 20 years to reverse that. For example, after the assessment, the Commissioner of Appeals may take 1 or 2 years, and maybe from data, 85 to 90% is not reversed in appeal. Goes to the tribunal 65 to 70% reversed in appeal, and Commissioner and tribunal may take about 5 years. And from 5 years, it goes to High Court. High Court may take 8 to 10 years. We know that. And from 15 years, Supreme Court 5 years. And I've seen cases where after Supreme Court taken a decision, it's taken 2 or 3 years for the assessing officer to give impact to Supreme Court decision. I've not seen any study of CBTD which talks about how court cases are implemented. Are court decisions implemented at all? What are the time taken to implement the court decision? So we have a broken assessment system, a broken appeal system. So we have to fix that. And the first thing to do to fix that is to make sure that the restrictions, the power of the assessing officer to reverse or write back anything that the tax filer files without adequate notice of giving a fair hearing, and making sure that whatever the tax officer does is reviewed by somebody else and signed off and done in a formal manner, and the person above the tax officer calls over the assessee to listen to them independently before making sure that the decision is given. And then we also have to make sure the appeal process is shortened. And for the appeal process to be shortened, we have to expand the appeal amounts that can go up. We worked with the PMO to increase that amount in the NDA government twice, but the amount is still small. I think Supreme Court, the figure is about 2 crores. We should say that anything above 50 crores goes to the Supreme Court, anything about 10 crores goes to the High Court. Until then, whatever decision is given by the tribunal, the department will not appeal unless it is certified in writing that is a question of law. And I think it's a very important process to declutter the entire process. And in case the tribunal decisions against assessing officers, strictures are found, it should be put into the confidential report. So they'll be very, very careful. And there is rent seeking in the entire process. Just the other day, Shekhar, one of our startups came and told me, sir, a tax officer for transfer pricing wants to add 2.5 crores to revenues and asking for XX checks in return, not to do that. I was shocked. I'm sure all of you have got horror stories because you are given the taxman unbridled power and there's no appeal. And when you talk to the government, they say, please file a formal complaint. And if you file a common complaint, what will protect you from retaliation? The tax filer is very scared. The tax preparer is scared. The consultant is scared. Everybody is scared. Everybody suffers in silence because of the fear complex. And the government run by people whom we elect to run this country seem to be very helpless in the entire system and not able to protect any of us when we file a legitimate complaint. And even if the court is unable to protect any of us and ensure the rule of law. So we have to set right the tax assessment process and the tax appeal process. And in the tax appeal process, we have to have specialized benches in the High Court and in the Supreme Court. And there's one issue which I would like the opinion of all of you wise men and women who handle tax. And that is, we have 29 high courts, 29 or so high courts. So each high court can take a decision on a point of law for tax, and it applies only to the jurisdiction of the High Court. So we could have, in theory, 25 different decisions at the same point for companies in 25 headquartered in 25 different states. Why can't we have a High Court bench in every state which can opine on a matter of law, and whatever is opined by one High Court on the same matter of law will be applicable across the country? And it's a very important principle because we are a federal republic and each state is not an independent country by itself. And in the federal republic, can we have differential law due to court judgments when the law is meant to be the same because each state has its own high court? And this is impacting even the GST. Even in the GST, we find that every GST appellate body is taking a particular view on the law, and then you are stuck with that particular view. For example, I think in Maharashtra, they've taken a view that the costs of the head office should be charged to all the branches in a particular way or whatever it is. And I think it's going to create a lot of confusion. So we have to tackle this big principle of law, how to make sure that the legal decision taken by one high court will be applicable everywhere, and the appeal process lies to a central tribunal, or it possibly goes to the Supreme Court, which can have a special bench to decide on law. So quickly, they will come out with no differences between various high courts, and we can have a system whereby the appeal process can be done well. So we need appellate benches in the high court, especially for taxation, and in the Supreme Court too, so that it doesn't get stuck in the entire process. Then when it comes to tax policy, we must make sure that the taxation administration is properly, handled and revised. Today we have faceless assessment. Assessment has become electronic, and which is a good thing. But we are confronted with fairly unexposed tax people who keep asking the same question. One of the big issues that we have is the tax department has an enormous amount of data. They have the filings of everybody. They can research, they can get details, everything that is filed. Very often, when you go for assessment and you get a query, they ask you to submit the balance sheet, the P&L account, and all kind of details that are already submitted, which are already available to them. They don't look at the database, they don't review that, they don't do anything, blindly keep sending it. And very often, when the assessment is done, the officer gets transferred, and the officer is retires or get transferred. You have to start ab initio again. When assessment is taken up, there's no time limit for the assessment except for the time limit by law generally to complete 1 year's assessment. So we should have a time limit, and the assessment is taken up within 30 days. The assessment is completed, so that when the officials get transferred, etc., there is no problem. So we have to look into the nitty-gritties of the system and make sure that because of faceless assessment, the data mining takes place, data is done, and only what data is not available is sent to people. And I think that's extremely important. And they still ask you to send physical copies in a few cases. I think that is something that needs to be done. The next big administrative issue which has to be solved is the enforcement of the assessment decision, the court decisions. There has to be a time limit determined by the law or by CBTD to make sure that any decision the court is implemented within a defined time, and there is a review of the entire process by the administration to make sure that it happens. Then comes the question of refunds. And we have seen in our experience for many years that every year refunds are not given to people despite them having to pay heavy tax because of force sometimes. The refunds are delayed inordinately because everybody's got a target. And the taxman has got a target, and you go to them for assessment, and even if you're faceless, they'll tell you that we have this target, days. I may be wrong, but go in appeal. And we heard it so many times for so many years. I don't know whether you experience the same. So we must have a process whereby there is no target setting by the government on each individual tax officer. There are target setting to complete assessment and not for collecting the amounts, because then that leads to very perverse behavior. And this kind of perverse behavior has led to very unfortunate consequences. I remember when Finance Minister Jaswant Singh was there and we met him as part of the Kelkar committee, he told all of us, I'm not going to set targets for everybody. I'm going to say that you just do your work and that is it. We can't have such targets because targets leads to tax extortion. I remember the statement very well. And those 2 years we saw an upswing in taxation. So we got to make sure that the entire process is redone. It calls for business process re-engineering. Business process re-engineering, and that is important. And for all of that, there has to be a taxpayer service unit within the CBTD and even in the CBIC, where indirect taxes are done. I headed a committee for the Central Excise and Customs Board, where we wrote down as a technology committee that we need to have a taxpayer service unit which will pick up the grievance of taxpayer and address them adequately within a certain amount of time. So the entire process of tax assessment and the way they appeal and monitor has to be done by business process reengineering and respecting the taxpayers at all points of time. And refunds have to be given within possibly 60, 90 days of people filing because they hold it up, and the time limit for giving refunds had to be brought down by law. And this also calls into question the quantum of interest that we pay. If you remember rightly, the interest that we get for anything that's paid in excess is just the cost of the government borrowing, whereas the interest that we have to pay, which is not tax deductible, is maybe 2 or 3 times higher. When we get the interest, we have to pay tax on that. So we get maybe 70% of that or 75% of that net. And when we have to, when we pay short or we have to pay interest, the interest rates are very, very high. They were fixed long ago. Today, interest rates have come down. And I think it must be done to make sure that interest rates come down in case there are some demands. Yes, the tax rate that we have to pay in case we short pay taxes have to be higher than tax rate than the interest rates we get when we get a refund, because we cannot have the tax department become a financing agent for anybody, and we know what happens to people. So I think that is another area that we have to get, and there must be a simplification of the entire penalty system. Then comes the question of penalty, prosecution, etc. I think that has to be handled with care. I've not seen many prosecutions happen for taxpayers for tax evasion. Everybody gets a stay from the court, or maybe they settle it, etc. And we have to relook at the entire thing and make sure that nobody is able to get away by evading tax and become a bad example to other taxpayers. There has to be stricter enforcement in that particular area. Then comes the question of coercive powers of the tax administration. And the coercive powers of the tax administration have only increased for a period of time, whereby the generation of unaccounted money, untaxed money has not come down significantly from whatever I see. I may be wrong in that. And I think we have heard horror stories of tax people who go to raid people, block them and shut them up, don't allow them to get medicine, don't allow them to eat, and deny them their basic human rights, which is guaranteed by the Constitution, and very often sometimes beat them up and sometimes force them to sign coercive document agreeing just to get rid of them. I've heard real horror stories. I'm sure all of you have got horror stories to say. So we must pass a law that a citizen's home is sacrosanct, it is castle, like the English say, and to make sure that the taxman wants to go for a raid, they must get all the information, intelligence, they must go to a court and get a court order, and only with a court order enter somebody's house. We can't have a police state in the form of the tax department running amok and doing whatever we want. And we are seeing in many cases allegations of political interference in tax rates, etc. And we are seeing very perverse behavior happen. And we've seen a suicide happen of a very eminent business person in the country too. So having spoken about tax administration, let me come to tax rates. The good news is that the corporate tax has come down to 25%, and we see the increase in tax collection. That is the good news. It has become very much simplified. The incentive for any critical tax planning to reduce the rates has come down. I don't know how it's impacted your professions and other areas, Shekhar, but I think it's a very good thing, because I think tax collections are going up. People are not buying assets just to get extra depreciation to pay less tax. The cost of capital has come down because of reduced tax rates for corporates, and for new business is 15%. But we must also make sure that individuals are not taxed out of existence. The last 8 years, about 7,000 to 8,000 millionaires have left the country and removed the tax resident outside. Many of them because of tax terrorism, and many of them because of very high tax rates. Above 5 crores, the tax rate is 43%. 43% certainly high. Mr. Chidambaram had brought down the tax rate to 30%, and we've seen a massive increase in collection then and much more compliance with the tax law. When you have to pay 43%, the temptation to plan your taxes and do things to reduce is very, very high, and that complicates what you do. I think the taxman should study behavioral economics. I remember a conversation with former Finance Minister Jaitley at a wedding in Delhi, where I met him and said, I told him that, look, for 2 or 3 times in Parliament, you accused all of us citizens of not paying our taxes properly and saying that we are not a tax compliant society, and you blamed us. And then you said, people declaring income more than 1 crore is so low for this country, whereas so many people earn more than 1 crore, which is very true. And then you said, in order to increase compliance, I'm going to put a surcharge on people earning more than 1 crore. So if you're honest and declare your full income and you don't do anything hanky-panky, you got to pay higher surcharge. The people who levied us laughed all the way to the bank. And the next year, you levied a surcharge on income above 50 lakhs. I told him, Mr. Jaitley, you have said this, that you are penalizing honest people, people who declare, you're not going to get this. Then he told me, Mohan, I did it because I was told by the taxman I can collect 2,000 crores more. When the total collection was some 7 to 8 lakh crores, he said I can get 2,000 crores more. And this is the way tax laws are made in this country. I think it's a very unfortunate thing that, these things happen. And I think it's very important that we stop this and try to reduce the tax rate with all this surcharge being given. And many states in the Federal Republic are complaining that the surcharges don't go to them because it goes to the central government and not to them. And this is a mean of making sure that the state don't get the taxes. And we have to relook at this because we have to accept that everybody has to pay the share of tax, but you cannot tax people out of existence, and anything about 35% will not be looked upon favorably. And this was done by the current finance minister. The surcharge was increased just to make sure that we have an emergency because of many reasons, and we're going to increase surcharge to collect more money. But I'm sure that for many people have changed their tax residence drastically because of that. So we got to relook at the entire thing. Then we have a complicated tax structure for individuals. We have 7 slabs against 3 slabs, which are there earlier by the former finance minister Chidambaram. We have to relook at that and make sure it becomes very simple. And the tax slabs have to be something that all of us can remember. I don't know how many of you can remember the seven tax slabs. I could remember only 3. For the last 15, 20 years, you only had 3. You could remember it very well. You wake up in midnight, you'll always say it out. But today we've got 7 tax slabs. It becomes so complex. We should come back to simple slab and have a simple system and make sure that in the tax policy, we take care of senior citizens. Now, we don't have a social security system in this country like the United States and developed countries have. We don't have medical insurance when you grow older. You have to pay for it unless you happen to be a privileged person in the central government services. So you have to make sure that the tax burden on senior citizens come down. And for that, we have seen many incentives given to people for interest paid for housing loans and many things else, which the taxman has given proudly, knowing very well the great majority of people are not going to use it. And when you look at that, we got to make sure that for senior people, we make it very simple. And in fact, economist Soumya Ghosh has also said that with the interest rates coming down in bank deposits, senior citizens are deeply hurt. Their savings have got eroded, the returns are down, and they're slipping into poverty in large numbers because they have no other means of income except their savings which they put in the banks, and they want some other money, they may lose their capital. So it's very important that we have a special structure for people above 60 who will not get any of their ATC deductions because they don't want it, but they should pay lesser tax and in their twilight years live in greater peace. Then you look at the capital gains tax. I was speaking to Krishnan today and looking at the capital gains because we want to write a paper to reform that. Short term, long term, different rates, different time period, different assets. It's so complex. Nobody remembers that. Nobody understands the reason. It's a hodgepodge. So entire capital gain structure should be reformed and made simple so that it's easy to follow. So if you look at all the tax structure that has to be done, I remember when the Kelkar committee, when Dr. Kelkar came out with a report on tax administration and tax policy, tax rates, he told us very clearly, we will be able to win the battle to improve tax administration, bring in the tax information network, automation, etc. But on tax reduction and tax policy, we will not be able to win the battle because we can't do it. The too many interests will fight against that. And that's exactly what happened. So I think the time has come for drastic reforms in the administration of tax policy, in administration of tax assessment and appeal system, in the coercive powers of the tax person, making the tax person accountable, and in the rate structure and the economic incentives based on the Pasati-Som committee reports. And that will be fantastic. Now, let me come to another area, that is fiscal policy. What should we do? Now, we have a very interesting system. This year, probably the tax collection will be 2.5–3 lakh crores in excess of what is budgeted. And my personal view is the budget projections were underdone because I think the tax department, the government finance department knew that this could be better. There was uncertainty. But nevertheless, we're going to have 2.5, 3 lakhs. There is tax buoyancy. We've seen indirect taxes like GST have a tax buoyancy, and I think it's very important. Let me just talk a while about the GST2. GST came after consolidating 17 different taxes. Now the government has set up a group of ministers to reduce the tax slab and make sure that refunds or inverted tax decisions are taken care of. I think all of us should support that and look at how to simplify the entire system and make sure that it really becomes very buoyant. I think this year the tax buoyancy will come there. And there the dispute resolution mechanism is very antiquated. Like I said, each state has a appellate body which gives whatever decisions you want. We want a centralized appellate body where decisions for the entire country are given. So there's uniformity and a fast-track appellate system. We want a big refund, a very fast-based refund system too. And whatever I spoke about for direct taxes should be applicable to indirect tax in the administration, etc. Now, as far as fiscal policy is concerned, we are seeing an increase in tax collection. We are seeing an increase in investment in infrastructure. We are seeing divestment happening for LIC, and Air India may be sold. Air India, which has already lost 75,000 crores, may be sold. So what should the fiscal policy be in the future? So I think the fiscal policy should look at the basic structures of the Indian economy and see how to remedy those particular structures. Let me give you some example. What is the basic challenge for the economy for this country? The basic challenge for the economy for the country is 43% of our population depend on 16% of the economy. There's agriculture, which grows at 3%. 57% of the population depends upon 85% of the economy or 84% of the economy, which is growing at 78%. That's industry and services. And we have to shift people from agriculture to industry and services. And we are seeing the impact of that right now in the farmers squatting in Delhi, though it's a very political thing. But the root cause is the farmers are unable to earn adequately to keep body or soul together. People depend on farming has come down from 61% maybe 17, 18 years ago to about 15, 16% right now, and to about 43% right now. And to make the shift, we must make sure that we have a fiscal policy to encourage labor-intensive industries. If you look at China's export, a large part of China's export is the creation of labor-intensive industries. If you look at how China opened up, China first reformed agriculture, created surpluses, then reformed the SEZ system, where the coastal district became SEZ. They invited the world's investment to set up labor-intensive industries, large manufacturing, assembly, use the surplus from that to build infrastructure, invest that into high-tech, and then now it's become an economic superpower. So we have to make sure that India lost out in the labor-intensive industry because our tax policy incentivized capital in a labor surplus, capital scarce country. If you are incentivized labor by creating incentives for hiring more people, we would have created more wage good industry at a lower rate, exported that because that is our competence, grown that, create more employment, and then thereby economic surplus. Instead of that, we said if you set up a refinery of 50,000 crores with 1,000 people, we'll give you tax incentive worth 40,000 crores. But it only creates 1,000 jobs and the value addition is only 15%. So we misread economic policy, getting carried away by capital investment rather than jobs. And China did exactly the opposite, looking at jobs, because jobs are important. Even in the West today, jobs are the most important thing, and incentives are given for creation of jobs. So I think we should look at labor-intensive industries and create Middle India, particularly 250 districts of Northern India where there's labor surplus, and incentivize labor-intensive to come there by giving certain incentives based upon jobs, etc. So you will see the shift of people from agriculture to labor-intensive industries. Of course, the capital-intensive industries will go up. And today we have a situation in this country where the per capita income is around 1,51,000 rupees. Karnataka is 2,55,000 rupees. Bihar is 49,000 rupees. And UP is 69,000 rupees. And there is labor surplus in North. There is no labor surplus in the South. We have labor-intensive industries in the South, and many people from the North are emigrating. So if you allow labor-intensive industry to come up in the North with very good infrastructure, good power which is available today, we'll be able to create jobs and become competitive, and the good infrastructure will connect those areas to the markets, to the ports for export purposes. Next thing, we must create a policy for the government to make sure that we incentivize the creation of small towns. India has 7,000 small towns. and 7,000 small towns are called census towns. So we must invest in them to make sure the labor-intensive industries come there. There's adequate infrastructure, quality of life, education, health, etc., which is happening, but must be more focused so that their jobs are created and people don't have to immigrate long distances and live in misery in big cities, getting very less compensation and crowding the places. So we must make sure that these things happen in a big way. And then in education too, I think we have a new education policy, but there's one piece missing in the new education policy, and that is research. No country can advance without research. And the government has said there'll be a 50,000 crore funding for the National Research Foundation, but no money, I think, has been allocated this year. We would like some money to be allocated and research being taken very seriously, but research on a competitive basis without giving it to government-funded institutions. It must be to everybody on a competitive basis, so innovation spread across the country. Now, if you look at the United States, why is the greatest economy in the world? It's not because of its military. It is because of the research and innovation and technology that is there in its universities and in places like Silicon Valley. And India does have a very innovative startup sector, but there we need to have more R&D in our universities to create more high-quality PhDs, because that and intellectual capital is the only way India can become a middle-income country with $10,000 per head per capita income, possibly in the next 10 years. And the last thing what has to be done is there has to be transparency in the making of tax laws. For example, why is it that tax laws are done in secret? Today there is tax stability in the GST. Custom duties have become very small, so there's no need for tax secrecy. And as far as direct tax are concerned, why can't the government put up a tax legislation for public comments to say this is what we intend to do, get public comments, and then go to Parliament to pass it? Why the secrecy on the 28th of February or the 29th of February at 11:30 in the morning, the finance minister stands up and tells her the law is changed, this happened, blah, 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 without public consultation? It makes no sense. And most often the laws are very badly drafted and creates more litigation, and nobody understands them except even the taxman. And the taxman who prepares the law gets transferred very often. So we need to have transparency in the preparation of new tax laws and changes. And when the changes come, there has to be grandfathering, and there has to be a time for earlier issues to be solved. There has to be a time for a changeover to the new system. For example, right now they have bought a board for settling old cases, right? There's a settlement commission. Now settlement commission had cases. Suddenly one day it was changed, and a new board is set up with the bureaucrats, the tax department, and they're going to come. And how do we shift over? What happens to cases midstream? We don't know what happens. Nobody has thought through the consequences. So that is why when you make policy, there has to be an impact analysis. In the UK, Pasati Shom tells us that every time that there's a tax change, there's an impact analysis. And the impact analysis is given to Parliament by the finance minister to say, this is the tax change we want to bring. We have had consultation, and here is the impact analysis. And we believe it's the long-term interest of all citizens. There is no impact analysis. There is no thinking of the impact. There is not much thinking at all. Just, a rush. In fact, I remember Senapati and I had gone to meet Mr. Chidambaram when he was finance minister, because they had bought a law to tax stock options on vesting. Okay, there is a grant, there is a vesting, and there's an exercise. The world tax and exercise. And we told him, when it vests, you're not exercise. How can you tax it? You're not paying any money. You can't do that. You're the only country in the world to do that. Then he said, explain to us. We explained to me how there's a grant, there's a vesting, there's an exercise, and what it has to be. Then he told us, Senapati and Mohan, let me tell you one thing. If you think we have all the wisdom to make the law, we don't. 2 or 3 of us sat down 2 or 3 days before, and we said we must do it, and then they wrote out the law. None of us are experts in that. We didn't understand, but we had to do it. That's the kind of secrecy that they have. That's the kind of work that they do. Why can't they put it up and say, we are planning to do that, get public feedback, and then debate it? And once the finance bill is there in Parliament, when is the last time you saw good debates on the finance bill in Parliament? For the last many years, you had the guillotine. The Parliament is shut. Parliament, there's no debate. Everything is done. Nobody debates. Nobody points out. And suddenly they decided, and then there's a guillotine, and you give a feedback. Nothing happens. And then the non-transparent way of the tax policy. For example, this year too, when the budget was made, we remember the finance minister coming to Bangalore. I think Shekhar, you were there. We are all called. 300 of us came. We fully prepared. We went and spoke. You notice one thing, they were the bureaucrats, revenue secretary, finance minister. None of them, I think, wrote down what we said. And the finance secretary actually laughed at us. He didn't note down, he didn't say, this is just a show, a sham. Because our concerns were not noted down. They said, give a paper, we don't know what happened, and we are all prepared. And they just came and said, I remember one instance where in the finance bill, they had said that there'll be a 10% withholding tax if you take remittance out under LRS. We stood up and said, why are you doing that? Then the finance secretary said, we had $18 billion go out, and a very large part of it, 65%, is gone out in the name of drivers and everybody else. And people are taking the money out. Then we said, why don't you pass a law to say that anybody who's got a PAN number, has filed 3 returns for 3 years, will not have to have a taxation source. Anybody who has not done that, okay, you do it if you want to think there's tax evasion. And they said, a good idea. And they went back and said, we will do $10,000 or something for everybody. I mean, this is a sham. They don't write down. I've been to Delhi to meet them to talk about angel tax and talk about everything else. Section 68 or 66, whatever it is, Shekhar. And to talk about it, I had the CBTD chair sit down with me, the revenue secretary. They listened to me, they laughed very well, took the paper, kept it by the side, and that is it. Then when we went and protested about angel tax, we had the PMO call us, we had a meeting. Then I remember a very senior secretary calling me up and saying, oh, Mohan, we have changed that because the Prime Minister has said this must be changed. Did you look at it? I said, no. Then he sent it to me. Then I looked at it and said, the drafting is done so badly, there is no change. I said, everything is wrong. You're not changing anything. Then he said, send it to me. Then I had a meeting with Subhash Garg, who's the finance secretary, and they told him, he agreed with everything I said, but the person who was drafting it wrote something else. So between the decision of the government and the drafting, there's a big gap. And the drafting is what impacts all of us. So whatever the decision of the government and drafting doesn't come, the only way to be remedied is to put it up a public consultation so everybody gives a feedback, and that matter is debated by the finance department. And our representatives, the political leaders, look at protecting us from very perverse reactions of the tax people, because we are oppressed by the entire tax system, and that's why the word tax terrorism has come. So we have to change all this and make sure there is democratic tradition, there is transparency, there is openness in tax administration, because tax rates don't have to be secret anymore. The great majority of taxes are in indirect taxes, are in the GST, and the custom duty has come low. We know that many years back, the custom duties are manipulated. They were changed overnight to favor people. We know that. Those things don't happen because the rates have come down. So I'll stop here by saying, I think we need a wholesale change in taxation policy and in fiscal policy. In taxation policy, to make sure that trust is there in the tax policy, which doesn't exist today. Tax terrorism is gone. That assessment process becomes much more taxpayer friendly, and there is justice done to us, and the entire tax litigation comes down, and tax litigation takes lesser time, not 15-20 years, and they don't intrude into a personal space, they don't harass us, and there is a rule of law in the court decision before they come to anybody's house, and even in the settlement of disputes and the pronouncement of court, there is uniformity, and we don't have to create a highly complex system, both in direct and indirect taxes. And in fiscal policy, there has to be attention to changing the basic structure of the economy in terms of making sure that the north and the south of this country, east and the west of the country are diverging, and we make sure that we focus on job creation, we focus on the fundamental transformation of the economy, because today we are in a fortunate position because of Prime Minister Modi, that by 2022, the great majority of Indians will have the necessities of life: food on the table, water in the tap, power in the switch, a toilet in the house, a roof for the head, education for the children, a bank account, a gas stove in the house, an internet connection, and access to jobs and education. Almost all will have that because of the huge spending that has gone on. And that means we are now to enter a new epoch. And for that, the basic structures have to be seen and invested, and fiscal policy should go towards that. Thank you very much.
Thanks a lot, Mohan. Sunil, back to you, Sunil.
Thank you, sir. As always, very insightful and covering all aspects and elements from end to end. It's always blessed to have you kind of speak to us with all of the experience that you've had. And I agree with all of what you've said. As tax practitioners, I do see that there are things that need to be changed dramatically. I do believe that on certain elements, especially on going digital and using of technology, the government has made the right moves, but I think we still have a long way to go. And all that you have said, I think we will, include in our representations that we do to the government, and hopefully, we will see the light at the end of the day. Our job is to keep persistent, keep pursuing, and I think we will see the results with your support and everyone else in the tax fraternity. Thank you so very much for that very insightful address. Thank you. Shekhar?
Hey, thanks a lot, Sunil. Thank you, Mohan, for your very insightful and, as usual, your guidance and your thoughts. Certainly, from a Bangalore Chamber perspective, we'll be taking your guidance and be taking your inputs representing to the government. And you are very right. In the last meeting, when Madam Nirmala Sitharaman, we raised the issue of reassessment under 147, and Madam said in the stage that this is not the intention, and what has come out is completely opposite to what she said in our meeting. And you also remember she wanted a paper on startup from you. We sent a paper on startup. Nothing has moved after that. So as you rightly said, there is a lot more action we need to do. And certainly we will take it forward from this, Mohan, and then we take all your points. And I know, Mohan, that for when employee stock option taxation was introduced, you were the person who went and fought for that, and you filed a case in High Court, Supreme Court. You took so much of time for you to get a refund from that. I am aware of all the struggle that me and Padam worked with you at the point of time, along with you and Krishna, and I am aware of that. Second one on the angel tax also, you took a lot of steps. But let's put some more efforts on that side. From chamber perspective, we are working on that. And you are aware that ITRAF also, we are putting all the stuff on from that moment. Thank you so much once again for being here. And certainly, one more point, Mohan, which is very passionate for you and which I am always hearing from you, incentivizing the job creators and incentivizing the job organization which creates a job. And number two, I know very well you had discussed with me some time back of bringing back the gold, which is to the market, and then create the liquidity, which will enhance the middle income group. I think both two are the revolutionary schemes which is still yet to be accepted by the government. I'm sure one of those will get accepted. Beyond that, Mohan, I can keep talking about all your points, what you discussed with me, but time is of essence. But once again, thank you, Mohan. Thanks a lot. And we will take all your points and take it part of a BCIC representation. Thank you so much. And before concluding, before national anthem, I just wanted to inform all the people who attended, and I request you attend tomorrow. Tomorrow we have a very important sessions by S. Ganesh, Dinesh Kanabar, and finally Mr. M.R. Venkatesh, who's other firebrand speaker like Mohan, will be talking about how to take the 5 trillion economy, Indian economy, to the $5 trillion. So request you not to miss tomorrow's session, and request all of you to attend tomorrow's session. And before that, before we conclude, I'm requesting Prithvi to put on national anthem. Prithvi and Rupa, just can you go on national anthem, please, and conclude today's session. Thank you, Mohan. And just
thank you.
Start national anthem.
Thank you very much.
Thank you.
जनगणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे.
Thank you, and we'll see tomorrow evening at 4 o'clock. Thank you. Thanks a lot.
Thank you. Thank you, sir.
Thanks.
See you, Shekhar. Bye.